They look like they kind of cute though. I don't know how to see them in person.
Look at, hold on. Let me go to my page real quick. Look at this, Mo. Look at this shit
You
here.
sharing?
No, I ain't finna share the screen. I'm just
Oh,
finna tell you. This shit got over 10,000 likes and 500 some comments.
you on Facebook?
Oh, it's Instagram.
Mm. All right, we live.
All right.
Peace Power with Profit, y'all. Welcome to the Urban Economic Empowerment Show. We got Chris. He's gonna be talking about mutual funds and DPPs. So you guys get your notebooks out. We gotta get back to trying to create a legacy, financial stability, for our families. And what better way to do it is to get educated. So I'm passing the mic to Chris.
What's up, y'all? Peace, power, and profit. Let's get it in, man. We're gonna talk about different type of uh investment companies and vehicles just for your education. Also DPPs, which are direct participation programs, and gonna cover some municipal securities. So when you pay taxes, you know where this tax money is supposed to be going and how you can invest in these types of things because people out here ignorant don't know that you can invest in some of these vehicles or you can participate if you just learn the information. So without further ado, let's get it in. All right, so let's start with the foundations of investment companies. So the securities markets are gigantic, complicated, and intimidating for many investors. Investment companies can benefit those who don't want to put the required effort into investing. Um, Financial professionals working on behalf of these institutions invest their customers' money. Investment companies have existed since the 1920s, but weren't formally recognized or regulated until 1940. In the 1900s, the financial markets were characterized by a lack of information, deceit, and market manipulation. During and after the Great Depression, many financial regulations were signed into law to prevent financial fraud. One prominent piece of legislation was the Investment Company Act of 1940. This law formally defined investment companies and regulated their activities. In particular, three investment company classifications were created. So you have management companies, unit investment trust, and face amount certificates. All right, management companies. As the name suggests, management companies specialize in managing their customers' money. Investment advisors working on behalf of these institutions invest in managed pools of customer funds according to specified investment objectives, e.g., investing in investment grade bonds, and so forth. Two types exist. Two types of management companies exist: open end management companies, which are mutual funds, and closed end management companies, which are closed end funds. Next is unit investment trusts or UITs. Unit investment trusts also invest their customers' money. These pooled investments collect capital from investors and invest in a basket of securities created by financial advisors. Unlike management companies, UIT portfolios remain fixed, are not managed continuously, and maintain a maturity date in which the portfolio is typically liquidated and the proceeds are paid to investors. Next is face amount certificates or FACs, FACs. Face amount certificates are the last classification of investment company. A typical version of this product involves investors making periodic payments to the issuer in return for a fixed payout at maturity. For example, an investor contributes $500 monthly to a face amount certificate for a promised payout or redemption of $100,000 at the end of 10 years. Another version of a face amount certificate involves an investor making a lump sum payment in return for a promised payout at maturity. For example, an investor purchases a face amount certificate for $10,000 today and is promised to receive $15,000 from the issuer after 5 years. These are known as fully paid face amount certificates, which work similarly to zero coupon bonds. FACs or face amount certificates are issued with termination or maturity dates when the security's face or principal value is paid out. Investors can hold the security until this date or redeem it with the issuer for a reduced value before maturity. All right. Types of funds. Most investment companies are funds, including mutual open end funds, closed end funds, and exchange traded funds or ETFs. The fund type depends on the fund's investment goals and the securities it invests in. Some can be easily distinguished, while others may require memorization. These are the primary types to know. You have growth funds, growth and income funds, balanced funds, income funds, specialized funds, sector funds, index funds, asset allocation funds, and international slash global funds. Growth funds. A growth fund seeks to attain capital appreciation, buy low, sell high, often by investing in growth focused common stocks. Convertible preferred stock and bonds may also be included, as their convertibility into common stock provides the potential for capital gains. Okay, let's see. Aggressive growth funds are also growth funds, but with more risk involved. This type of fund invests in common stock that provides a higher return potential, including small and micro cap smaller stocks from volatile or emerging industries. Growth and income funds. Growth and income funds also focus on attaining capital appreciation, but also invest in income producing common and preferred stocks. Virtually all preferred stocks maintain a fixed dividend rate, but only larger and well-established companies, e.g., Walmart, Coca-Cola, Procter and Gamble, and so on, pay dividends on their common stock. Stocks that provide dividend income are generally less risky than growth-focused common stocks. To pay consistent dividends, a company must make consistent profits. Remember, most growth stock issuers are either unprofitable or have volatile revenues. These issuers will be unlikely to pay consistent dividends. Therefore, a fund allocating a portion of its portfolio to dividend paying stocks is generally more conservative, less risky than pure growth funds. All right. Balanced funds. Balanced funds are similar to growth and income, but this fund type seeks a relatively even distribution between growth focused common stock and income producing securities, which include debt securities. Balanced funds invest in bonds and stock, whereas growth and income funds only invest in stock. Don't get the two mixed up. Income funds. Income funds only invest in income producing securities and are generally more conservative and less risky than growth focused funds. This is primarily due to price volatility in the stock market, which moves in various directions depending on business activity and general economic conditions. If a company has a rough year or the economy is going through a recession, Common stock investors can experience significant losses. Bonds, preferred stocks, and dividend paying common stocks are the primary investments held in income funds. Bond issuers are legally required to pay interest, and the bond market typically only experiences significant price fluctuations when high levels of interest rate or inflation risk exist. Although dividend payments from preferred stock are not legal obligations, issuers generally only skip dividend payments if the company is facing remarkable financial troubles. As we discussed above, the largest and most well established companies are the most likely to pay dividends on outstanding common stock. Due to these reasons, investors can usually avoid significant losses with a diversified portfolio of income producing investments, although this is only sometimes true. Different types of income funds include corporate bond funds, municipal bond funds, and U.S. government bond funds, which invest in the securities of those issuer types. These are also high yield bond funds. There are also high yield bond funds, which invest in riskier junk bonds with sizable yields. Conversely, there are conservative bond funds that invest in investment grade bonds with lower levels of risk and yield. International bond funds invest in bonds from foreign companies and governments. Investors can also find Ginnie Mae, Fannie Mae, and Freddie Mac funds. If you recall, these are the federal agencies that purchase mortgages from financial institutions. Investors receive income originating from interest and principal mortgage payments. Although subject to prepayment and extension risk, Ginnie Mae, Fannie Mae, and Freddie Mac funds are suitable for risk averse investors seeking conservative investments due to the government backing of agency securities. Money market funds are also a type of income fund, but generally pay small amounts of income. As a reminder, money markets are fixed income securities with 1 year or less to maturity. Many investors utilize money market funds similarly to their bank savings account. When an investor maintains cash in a brokerage account, it is typically invested in a money market fund. Priced at a consistent $1 per share, money market funds usually make monthly dividend payments. Investors can reinvest the dividends and buy additional $1 shares or take the payment as cash. These funds are very liquid, easy to sell, provide a small amount of income, and are suitable for investors with short term time horizons. Additionally, sales charges, discussed later in this unit, and other transaction fees are rarely imposed on this type of fund. Specialized funds. Specialized funds are not specific to growth or income investments. These funds only invest in securities from a specific industry or region and can vary in risk and return potential. Funds that invest in particular industries are sometimes called sector funds. Index funds. Index funds aim to give their investors the same return as a specific index. An index is simply a list of securities that tracks and averages all of the values of the securities on that list. You've probably heard of the S&P 500, the most popular index that is commonly referred to as the market. The S&P 500 is a list of 500 large company stocks traded in the United States. Investors commonly use indexes to determine general trends in the market. When the S&P 500 is up, it is assumed the broad market is moving upward. Indexes come in all shapes and sizes. There are small and large cap indexes, which track stocks of smaller and larger companies, respectively. Also, there are a variety of bond indexes that track the bond values of various issuers. Additionally, specialized indexes track investments from specific industries and regions. Investing styles can be broken down into two general categories. Active management involves picking and choosing the best investments within a market. For example, the fund manager of The Fidelity Large Cap Stock Fund, ticker FLCSX, identifies and invests in what they consider the best large cap stocks in the market. On the other hand, passive management involves tracking an index as closely as possible. The fund manager of the Fidelity 500 Index Fund, ticker FXAIX, invests in the same stocks in the S&P 500. There is no picking and choosing investments with index funds. Asset managers simply copy the index. Passive management through vehicles like index funds is becoming very popular in the market. We'll discuss more about this investing style later in this unit. All right. Asset allocation funds. Asset allocation funds invest in specific asset classes depending on various factors. Some asset allocation funds maintain a constant asset mix, like the Fidelity's Asset Manager 70% fund, which invests 70% of portfolio assets in stocks, with the remaining 30% invested in long and short term debt securities. Some asset allocation funds shift their structures around due to expected market performance or fund requirements. Life cycle funds, also known as target date funds, maintain changing allocations and are meant to follow along an investor's lifetime. They start more aggressively when originally issued, investing primarily in growth stocks. As time passes, the fund becomes more conservative by shifting assets into safer fixed income securities. This structure enforces good investment practices. The older an investor is, the less risk they should expose themselves to. A good example is the Vanguard Target Retirement 2050 Fund, which was created for investors targeting retirement around the year 2050. The fund is aggressive right now, with roughly 90% of the assets invested in stocks, but the allocation will shift more to bonds and other fixed income securities as time passes. International/slash global funds. As the name suggests, international and global funds seek investments outside the United States. International funds only invest in securities issued outside the U.S., while global funds invest worldwide, including in U.S. based securities. Investments in these funds provide an added layer of diversification and can hedge an investor against domestic risk. We good? I guess so.
Yeah, we good.
All right. So, characteristics. Open-end management companies, known popularly as mutual funds, provide investors access to professionally managed portfolios, aka pools or funds. Open end refers to the number of outstanding shares this type of management company maintains. Every new purchase of a mutual fund involves the creation of shares, while every redemption or sale of a mutual fund involves destroying shares. For example, assume ABC Mutual Fund has 1 million shares outstanding at the beginning of the day. If an investor purchases one new share of ABC Mutual Fund, the outstanding shares increase to 1,000,001. On the other hand, if an investor owning ABC Mutual Fund shares decides to redeem one of them, the outstanding shares decrease to 999,000. Bottom line, new purchases increase outstanding shares, while redemptions, shares, sales decrease outstanding shares. This structure is unique in the world of securities. Issuers usually offer a fixed number of shares or units to the investing public in the primary market. After this, the security trades in the secondary market. The number of outstanding shares or units stays fixed indefinitely unless the issuer sells more shares in an additional public offering or APO or buys back its securities in the open market. With mutual funds, the number of outstanding shares changes daily. All new purchases of mutual fund shares are considered primary market transactions, like initial public offerings, IPOs. The parties in any given transaction determine whether a security is traded in the primary or secondary market. When an issuer sells a security directly to investors, it's a primary market transaction. When any party other than the issuer sells the security, it's a secondary market transaction, e.g., an investor selling shares of stock to another investor in the market. Mutual funds always involve the issuer, so mutual fund transactions occur in the primary market. Investors in mutual funds are known as shareholders. It is a similar investment structure to common stockholders, as investors are considered owners and are granted specific rights. In particular, shareholders maintain the right to receive dividends and voting rights over important issues, detailed later in this unit. Similar to equity, common and preferred stock securities, the board of directors approves dividend payments. Each mutual fund contains a unique investment strategy and goal, so investors know what they're getting into when they invest. For example, the Fidelity Corporate Bond Fund, ticker FCBFX, invests in longer term corporate debt securities. Once an investor's money is placed in a mutual fund, when buying shares, it is invested according to its objectives. For example, an investor purchasing Fidelity Corporate Bond Fund shares will have their money directly invested into corporate bonds within the fund's portfolio. All right. Mutual fund parties. Various parties must fulfill roles and responsibilities for a mutual fund to function as intended. We'll discuss the following in this section: fund sponsor, which is the underwriter, board of directors, investment advisor and fund manager, and custodian bank. All right, fund sponsor or the underwriter, sometimes called, fund underwriter, is responsible for establishing the fund, registering it, and creating a marketing strategy. Establishing the fund requires gathering initial capital or money and setting the investment company structure. Regulations require at least $100,000 of net capital to assemble an open end investment company. Once the money is in place, the sponsor files appropriate documents to create the fund, similar to creating a new business. Once the fund is officially created, it must be registered with the Securities and Exchange Commission, SEC, before being offered to the public. We'll discuss more about this process in the primary market unit. For now, assume registration involves filing paperwork with the SEC and making numerous disclosures to potential investors. Those disclosures are provided to investors in the prospectus, a document we'll cover in detail later in this unit. The sponsor will then develop a marketing strategy for the fund. The strategy may involve adding the fund to an already established network, e.g., making the fund available on Charles Schwab platform, or creating a new network of funds, e.g., a new business, to compete with companies like Charles Schwab. Companies like Charles Schwab, Fidelity, and Vanguard, which sponsor their own funds, also offer customers mutual funds of other companies. For example, a customer of Fidelity can invest in Fidelity funds and Charles and Schwab or Vanguard funds, or the funds of hundreds of other sponsors. Of course, there's a financial incentive for those companies to offer funds of their competitors. In particular, the selling company typically earns a sales charge. For example, Fidelity charges its customers $75 to purchase shares of Vanguard mutual funds as of June 2023. Board of Directors. A mutual funds board of directors plays a very similar role to the board of directors of corporations, which with outstanding stock. They represent shareholder interests, approve dividend payments, and are responsible for the fund's overall success. Depending on how the fund sponsor sets the fund structure, the sponsor may initially appoint the board of directors, or vice versa. Either way, it's not critical. Once the board of directors is set, it's the responsibility of the shareholders to approve their standing or vote in new members as time goes on. All right, the investment advisor and fund manager. The fund sponsor must hire an investment advisor, a company responsible for the investments in the fund. Often, the sponsor hires itself to act as the investment advisor. From there, the investment advisor appoints an employee or employees to serve as the fund manager or fund managers, the person in charge of implementing the fund strategy. While this may seem confusing, let's discuss a real world example. The Vanguard Diversified Equity Fund, ticker FDEQX, maintains the Vanguard Group, Inc., as its investment advisor, with three Vanguard employees serving as co fund managers: Ariel Dennis, Walter Nejman, and Michael R. Roach. Fund managers invest shareholder assets according to the fund's investment objective. Although they choose which securities to invest in, they must invest within the fund's parameters. For example, a municipal bond fund manager would invest shareholder assets in municipal bonds. Many mutual funds contain hundreds of millions or billions in shareholder assets, and managing these large sums is challenging. Therefore, fund managers typically have years of finance experience and stellar educational background. For larger funds, fund managers utilize teams of analysts hired by the investment advisor to help them make investment decisions. The mutual fund industry is very competitive, and it's common for a fund manager to be fired if their strategies do not perform well. Conversely, a fund manager with a long tenure typically means they found great success managing shareholder money. For example, Will Danoff has managed the Fidelity Contra Fund for well over 30 years. His average return is over 12%, which exceeds the average annual return of the S&P 500 by greater than 2%. This is known as beating the market, which is incredibly difficult to do over long periods. In fact, only 20% of fund managers like Will Danoff outperform the market over a 5-year period. Custodian bank. The custodian bank, sometimes called the mutual fund custodian, is responsible for holding, safekeeping, and record keeping the fund's assets. This role is typically filled by large banks like JP Morgan Chase, Bank of New York Mellon, and US Bank.
One of them teas.
What?
Oh no, never mind, Chris. Go ahead.
All right, shareholder benefits. Mutual funds provide several benefits to their shareholders. Professional management is a significant benefit, especially to investors lacking market knowledge or the time to spend investing their own money. Mutual funds also provide instant diversification to their investors, as most funds contain dozens or hundreds of different investments within their portfolio. For example, the Fidelity Contra Fund holds over 300 securities in its portfolio. When a single share of a mutual fund is purchased, the investor gains a small amount of ownership in numerous securities. Diversification is essential for many investors to succeed, which involves investing in many different securities instead of just one or a few. Investors with money concentrated in one or a few investments are subject to considerable capital risk. Without diversification, if one security falls drastically in value, the investor's entire account goes with it. With diversification, losses from one investment can be offset by the success of other securities in the portfolio. As we learned in a previous chapter, diversification directly reduces an investor's exposure to non systematic risk. All right. Expense ratio. Fund sponsors and managers don't create and run mutual funds for free. Plenty of fees can be assessed while invested in the fund. However, Investors typically don't notice them. A fund's operational expenses are wrapped up into one representative cost, the expense ratio. If a fund maintains an expense ratio of 1%, its total fees are equivalent to 1% of the fund's assets. A fund with $100 million of assets and a 1% expense ratio collects $1 million in annual operational expenses. To pay for its operations, the fund will withhold part of the returns it makes for its customers. For example, a fund may liquidate a position for $5 million and hold back $1 million to pay for its operations. There are several components of the expense ratio. The largest and most prominent is the management fee paid to the investment advisor for their services. The custodian fee is paid to the institution maintaining custody of the fund's assets. There are also legal and administrative fees that pay for legal services and other general costs like record keeping. Mutual fund investors prefer lower expense ratios as a fund's expenses cut into shareholder returns. The lower the ratio, the more efficient a fund is with its money and the more attractive it is to investors. Limitations. Mutual funds generally do not mix with margin, which involves borrowing money to invest. A margin account allows investors to purchase securities with money borrowed from their broker. Due to securities regulations, investors cannot purchase primary market offerings on margin. This includes mutual funds. Additionally, mutual funds cannot be sold short. All right. Shareholder rights. Like common stockholders, mutual fund shareholders are granted certain rights. We'll cover the following in this chapter: right to vote for the board of directors, right to vote on fund specific matters, right to prorate share of dividend and capital gain distributions, right to fund disclosures. All right to vote for the board of directors. Mutual fund shareholders maintain the right to vote for the board of directors, sometimes called the board of trustees. The board of directors is a group of shareholder approved board members with industry knowledge or valuable insight whose primary role is representing shareholder interests. They oversee the overall operation of the fund and ensure its compliance with relevant securities regulation. Um, wait. Okay, if something goes wrong, the fund is not complying with the law, or the portfolio is not aligned with the fund's objectives, and so on, it's the board of directors' responsibility to fix the problem. Additionally, the board of directors is responsible for nominating and overseeing the fund's investment advisor, the company responsible for investing the fund's assets. The investment advisor employs the fund manager, the person responsible for investing the fund's assets. These are important roles as they control shareholder money. Once the investment advisor is appointed, shareholders must approve their initial contract, which can last no more than 2 years. The contract is subject to annual renewal from there, although only one of the board of directors or majority shareholder votes must approve, not both. If the fund performs poorly, the board of directors can replace the investment advisor and fund manager. So, what people need to understand about that is that looking at the Tulsa Real Estate Fund, you can see why that ended the way it did, because the the fund manager Jay Morrison was incompetent and didn't know what he was doing, or maybe he did. Either way, he was in control of everybody's money. He was in control of the fund and the investment objective. And As we just read, you need qualified people to run this. He was trying to run everything. He didn't have the help he needed to actually run this fund, which is very important. And what people need to stop doing, stop investing into people's businesses and you don't know what you're investing into, because you end up in a situation like now where somebody took your money and they left with it, which was a risk. And though it's wrong, if you knew better, you would do better. So that's just a FYI. Um, Hopefully, everybody can understand that. You need to get with a professional that actually has history with these types of investments. Oh, my bad. Uh, and make sure they got a finance background and history, and they're actually in the field. That way you save your money. Make sure your money is safe. All right. Approval requires a majority of shareholder votes. Like common stockholders, shareholders are granted more voting power with each share owned. In particular, a shareholder gains one vote for each dollar invested in the fund. A majority of shareholder votes does not necessarily mean a majority of shareholders. For example, let's assume one shareholder maintains a position worth 51% of the entire fund, while a million other shareholders own the remaining 49%. If the one shareholder holding the 51% position votes to approve an item and the other million shareholders vote against it, the one shareholder's votes win. It's about voting power, not the number of shareholders voting. Hopefully, y'all got that. The Investment Company Act of 1940 requires at least 40% of the board of directors to be independent to ensure the board of directors is as unbiased as possible. That's very key. To be considered independent, also known as non-interested or non-interested, um, a board member must not have any related business with the fund sponsor, investment advisor, or fund affiliates within the past 2 years. On the other hand, interested or non-independent board members usually do business with or are employees of the sponsor, investment advisor, or fund affiliates, e.g., a subsidiary of the fund sponsor. While any board member should speak up if something fund related needs fixing, independent members are likelier to do so given their lack of attachment. All right. Right to vote on fund specific matters. Shareholders are typically asked to vote on a variety of fund specific matters annually. Similar to common stockholders, shareholders can vote by proxy or attend the annual shareholder meeting if one is held. The most pressing matters requiring a vote are changes to the fund's objective, for example, changing a stock fund to a bond fund, changes to the fund structure, for example, changing from an open end to closed end fund, changes to the fund's fee schedule, for example, implementing 12B1 fees, changes to the fund's diversified status, for example, reclassifying a non diversified fund as diversified. Okay. 12B1 fees are marketing fees, which we will discuss later. All right. Right to prorated share of dividend and capital gain distributions. Most mutual funds make distributions annually to shareholders. Dividends represent income received from investments within the fund's portfolio. For example, the Schwab Dividend Equity Fund, ticker SWDSX, primarily invests in dividend paying stocks and makes quarterly dividend distributions to shareholders. In 2022, the fund made dividend distributions equaling roughly 30 cents per share. The fund also made a capital gain distribution of roughly 62 cents per share. This type of distribution occurs when the fund manager sells a security in its portfolio at a gain, then distributes the profit to shareholders. For example, assume the Schwab Fund establishes a $10 million position on Coca-Cola stock, ticker KO, then sells the position for a total of $15 million a few years later. The fund could then distribute the $5 million gain to shareholders. These distributions are made once per year, typically in December. Shareholders maintain the right to receive dividend and capital gain distributions, but do not have the power to vote for them. Instead, the board of directors approve dividend payments. It's common for the board of directors to approve these distributions as there are tax incentives to do so. Cover later in this unit. All right. Right to fund disclosures. Most securities issuers are required to make in-depth and lengthy disclosures to investors. Mutual funds are no exception. In fact, mutual funds involve numerous disclosures, including a prospectus, statement of additional information, or SAI, annual SEC report, and semi-annual shareholder report. I want to ask the Tulsa Real Estate Fund investors, did they receive any of these? Because if you didn't, it was already wrong from the beginning. Um, the prospectus, sometimes called a statutory prospectus, discloses all important fund related information to potential investors and current shareholders. It must be delivered to investors at or prior to a solicitation or recommendation, or by the settlement of a fund purchase if unsolicited, no recommendation from a financial professional. In today's digital world, most investors are provided electronic access to their prospectus by link when buying shares online or via email. Information disclosed in the prospectus includes the investment objective, shareholder fees, past performance, at least 1, 5, and 10-year returns, details on investment advisor and fund manager, related risk, fund policies, and financial highlight. Funds that have existed for at least 10 years must disclose the past 1, 5, and 10-year returns. If a fund is not at least 10 years old, it must disclose as much of the typical requirements plus the life of the fund. For example, a fund in existence for 7 years would disclose the past 1, 5, and 7-year returns, or a fund in existence for 4 years would disclose the past 1 and 4-year returns. Fund policies include minimum required investment, e.g., minimum $2,500 required to invest, availability of shares only available to U.S. citizens, and excessive trading policies, restrictions imposed on investors that quickly liquidate shares. Financial highlights include the fund's historical income and expenses. A fund prospectus can be dozens of pages long and difficult to read from beginning to end. A summary prospectus, a condensed form of the prospectus, may be delivered instead of the statutory prospectus. Statement of additional information, or SAI, discloses the detailed in the weeds information related to the fund. Most shareholders never read the SAI, but it is perfect. It is the perfect document for an investor seeking knowledge on every aspect of a fund's operations. Information in the SAI includes micro details on fund policies, investment making decisions, funds financials, board member backgrounds. See, this is why you need this stuff. The SAI is not required to be delivered to investors, but must be made available upon request. Okay, annual SEC report. Funds must file Securities and Exchange Commission reports, which are made publicly available by the SEC upon receipt. These reports include market recaps over the previous year, fund manager comments, investment summary, details on fund portfolio, financial statements, balance sheet, income statement, financial highlights, income, expenses, and returns, semi-annual shareholder report. Funds must make semi-annual reports available to their shareholders. Most of the information disclosed overlaps with the disclosures made in the annual SEC report, including investment summary, details on fund portfolio, financial statements, balance sheet and income statement, financial highlights, income, expenses, and returns. All right. Transactions. Buying and selling Buying and selling mutual fund shares is unlike trading stocks or bonds in the secondary market. If you recall, a security that trades in the secondary market is negotiable. Most securities are transacted this way. Mutual funds do not trade between investors. They may only be bought or sold from the fund issuer or to the fund issuer, bought from or sold to the fund issuer. Because of how their transactions work, mutual funds are known as redeemable securities. When an investor buys mutual fund shares, their money goes directly to the fund's portfolio to be invested. When an investor sells their mutual fund shares, the fund must pay the value of those shares using cash in the fund. If the fund is short on cash, the fund manager must liquidate securities to make the payment. For comparison, investors trading negotiable securities do not transact directly with the issuer. If you were to purchase shares of Microsoft stock in the secondary market, you would buy from another investor, not directly from Microsoft. When a mutual fund transaction occurs, the foundation for the price per share is the net asset value, or NAV. The net asset value represents the value of the fund on a per share basis. For example, ABC Mutual Fund has $100 million of net assets in securities and 1 million shares outstanding. With this information, we can calculate the net asset value. Funds maintain assets and liabilities, which is why net asset value references net assets. Liabilities include required payouts, redemptions to investors, management fees, and administrative costs. The fund subtracts liabilities from portfolio assets, securities, and cash held in the fund to determine net assets. Net assets is divided by the number of outstanding shares to determine the net asset value on a per share basis. The most significant factor influencing the net asset value is the current market value of the portfolio securities. At the end of every trading day, each mutual fund calculates the total market value of all its securities and releases its net asset value to the public after market close. All right. Forward pricing. When an investor buys or sells a mutual fund, they are subject to forward pricing. Unlike stocks and bonds, which can be traded whenever the market is open, mutual funds only allow transactions to occur once daily at the market close. The cutoff time for mutual fund purchases and sales is 4 p.m. Eastern Standard Time. The closing time for the stock markets If you were to place a buy order for a mutual fund before 4 p.m. Eastern Standard Time, you will receive that day's net asset value, also known as the fund's closing price. Uh, Remember, mutual funds don't start calculating their daily net asset values until after the market closes. Once it closes, the fund calculates the market value of all of its securities, plus factors in deposits and withdrawals. This data is then used to calculate the fund's new overall net asset value. The term forward pricing comes from this pricing structure. When a customer submits a transaction request, they do not know the net asset value price they will be subject to. The net asset value, which will be the basis for the customer's transaction price, will be forwardly calculated in the future. Hmm. If an investor's purchase or sale is placed after 4 p.m. Eastern Standard Time, it will revert to the next business day's closing net asset value. It could be a while for the transaction to occur, especially if the request is placed on a Friday night after the market closes. In this scenario, the transaction executes when the net asset value is calculated Monday evening. Most investors transact in dollar amounts to ensure they don't overspend on their mutual funds. For example, a customer would typically submit an order to purchase $10,000 instead of a specific share amount. They may not know how many shares they receive, but they won't spend more than $10,000. In case you're wondering, shares are transacted in fractions. All right. Sometimes mutual funds are sold at their net asset value, especially if the mutual fund is bought directly from the sponsor. For example, Vanguard customers buy Vanguard funds at the net asset value. However, if a Fidelity customer purchased a Vanguard fund, they will likely pay a sales charge in addition to the net asset value cost. To compensate the selling group, other financial firms selling the mutual fund for distributing the shares, sale charges can be assessed on mutual fund transactions. The selling group purchases the shares at the net asset value from the fund sponsor, then resells the shares with an added sales charge. The most common type of sales charge is a front end load, which is assessed when customers purchase shares. There are also back end loads, which are charged when customers liquidate or sell their shares. We'll discuss the specifics of share classes in the next chapter. For the rest of this chapter, we'll only discuss front end loaded funds known as Class A shares. Investor purchase Investors purchase front end load funds at the public offering price or POP. The POP is the net asset value plus any applicable sales charge. In equation form, it's like this: POP equals net asset value plus sales charge. When a selling group member sells shares of a front end loaded fund, they charge for the value of the shares, net asset value plus the amount they're compensated, the sales charge. The total amount is the public offering price. For example, if an investor purchased a fund share with a $20 net asset value and a sales charge equal to $1, the POP, what they pay overall, is $21. Any sales charge assessed is based on the POP, not the NAV or net asset value. The maximum sales charge that can be assessed is 8.5% of the POP according to FINRA rules. What would a fund purchase look like with a sales charge? All right, we're not going to go through that. Sometimes the POP is called the ask, and the net asset value is called the bid. Um, when firms trade securities with the public, they establish a bid and ask. The ask represents the firm's asking price for a security or what a customer must pay to buy it. This is why the POP is sometimes called the ask. The bid represents what the firm is bidding for a security or the price an investor could sell their shares back to the firm. This is why the net asset value is sometimes called the bid. All right. Added requirements, as previously discussed, the maximum allowable sales charge is 8.5% of POP, public offering price. If a fund assesses the highest possible sales charge, it must offer a few extras to its investors. First, customers must be allowed to reinvest their dividends and capital gains at the net asset value, avoiding a new sales charge. Funds distribute dividends when securities in the portfolio pay income like dividends from stock or interest from bonds, and capital gains when the fund liquidates the security at a profit. Although there will be no sales charge, the customer will still be subject to taxes due on the dividend or capital gain received. When a fund makes a dividend or capital gains distribution, the value of the fund will fall. Remember, the net asset value represents the total value of assets in the fund. If the fund releases a bunch of cash to investors, there will be less money in the fund, resulting in a declining net asset value. Most investors reinvest their mutual fund income, providing them with more shares. Dividend and interest distributions occur frequently, but capital gains are generally only distributed once per year. When a distribution of any kind is declared, the board of directors is responsible for setting all important dates like um, the record date and payable date. Um, they also set the ex-dividend date, which is different than how stock dividends work. If you recall, FINRA and the NYSE set stock ex dates because they control settlement times. With mutual funds, the board of directors sets their settlement times, usually 1 to 3 business days after the transaction, so they have control over the X date. Another requirement for funds assessing sales charges is the conversion or exchange privilege. No new sales charge is assessed if an investor sells their shares and uses the proceeds to purchase a new fund within the same fund family. A fund family is a set of funds from the same sponsor. For example, Vanguard funds are all part of the Vanguard fund family. Like reinvesting dividends and capital gains, the transaction is taxable. If there's a gain on the sale, the customer will likely owe taxes on the transaction. Uh,
You finding another spot?
huh? Um, yeah, I'm trying to see if I want to read this. I don't think we need to read it.
What's up, Brandon?
Hey, what's going on, y'all?
What's up, Brandon?
What on, Chris?
Not much. Now, I want to make sure, everybody understand this. Listen, I
You said
know it, huh?
my fault. You said the settlement time for mutual funds is 3 to 5 business days
No, that's
for mutual funds.
no, it was just talking about if they sell if there's a gain on the sale, the customer will likely owe taxes on the transaction. It's basically saying that the New York Stock Exchange and FINRA, they control the settlement times. Um, it's normally 1 to 3 business days. That was in the past, but we all know it's 1 business day now. So T plus
Okay.
one. Yeah.
Okay.
Okay. Let's talk about returns real quick. Investors can make returns on mutual fund investments in 3 different forms. capital appreciation or growth, dividend distributions, and capital gains distributions. Capital appreciation or growth occurs when fund shares rise in value. For example, shares are purchased at $20 per share, then sold at $30 a few years later. Share prices rise when the collective value of the investments in the funds rise, and vice versa. Using a bond fund as an example, its share price will likely rise if interest rates fall. Y'all do understand the the existence between bonds and interest rates, right?
Say again.
Y'all understand the relationship between bonds and interest rates?
Get at the most.
What happened?
Do you understand the relationship between bonds and interest rates?
No.
Okay. So normally how that works is the actual bond itself reacts to interest rates, whether they rise or fall. So when interest rates fall, bond prices rise. When interest rates rise, bond prices falls. And the yield goes opposite of the bond price. So let's say you had a bond, a 30-year bond, and the price of it was 1,100. Yield on that could be 3%. And let's say interest rates fall, that means the price of the bond is going to rise, and I think the yield will stay the same. It's something complicated like that, what I remember. But bonds react to interest rates. When bonds are high, interest rates are probably low, most likely. When um, interest rates are high, vice versa. Oh my God, it just hit a 3-point shot at the buzzer. Um, so when interest rates falls, bond prices rises. When interest rates rise, bond prices fall. That's the gist of it. Um, as we learned in the bond fundamentals unit, debt securities maintain an inverse relationship with interest rates. Therefore, a bond fund would likely experience an increase in overall value when interest rates decline. If the fund were stock-based, its value would rise when the collective value of the stocks in the portfolio increased. Some mutual funds also make dividend distributions to shareholders. This is especially true for income-based funds investing in fixed income securities, preferred stocks like preferred stock and bonds. When a fund receives income from its investments, a bond fund receiving interest payments from bonds in a portfolio, most or all of the income is usually distributed to shareholders. Income payments from mutual funds are considered dividends, even if the income originates as interest. For example, a bond fund holding debt securities receives interest from the investments in the portfolio. When the interest is redistributed to the bond fund shareholders, it is considered a dividend distribution. Mutual funds can also make capital gains distributions to shareholders. This type of distribution occurs when the fund sells a security at a gain, then distributes at least a portion of the gain. For example, assume a bond fund liquidates a debt security in its portfolio for a profit. If the profit is then distributed to the fund shareholders, It is categorized as a capital gains distribution. All right. So you got three ways to make a return on a mutual fund: capital appreciation, growth, dividend distribution, and capital gains distributions. And they do come with fees, with a prospectus, disclosures, so forth and so on. I don't know if you was home, Brandon, but I was basically I was reading all of the disclosures, is that talking about Jay Morrison and the Tulsa Real Estate Fund, they had certain people on the board, or certain people that was basically guiding this fund. It wasn't just one person. You had a investment advisor, you had a board of director, you had a fund sponsor, you had a fund manager, which could be several employees managing the fund, picking the stocks, so forth and so on. And I was basically saying Jay Morrison didn't have any of this, and he was trying to do everything by himself, which is one reason why it failed. So, and I don't know if he had an investment objective, because you have to have all of that. Excuse me. And, people need to understand, when you invest in your money with someone, you need to make sure you check their background. Because with a prospectus, you and Mo both can speak to this. When you invest in something, that broker firm or that account, whoever owns that firm, they email you a prospectus to know what's in that, what's detailing in that ETF or index fund or whatever. You get a prospectus, you get disclosures, such and this. This is, who's behind the fund, if there's an expense ratio, so forth and so on. You get that information. So people need to understand that stuff is required. It's not something, you can choose to have, but it's required.
No, yeah, I caught the end of that when you talk
Okay.
about Jay Morris's fund.
Right. But I'm sure y'all got emails before, from like Stash or Webull, sending you account statements and disclosures and prospectus and stuff like that.
Yeah, I've gotten them.
Yeah, and
Yeah, it's still coming in the mail
it
to
won't
me.
hurt you to right.
What was the thing that the investors can request to get?
Oh, you can request to get the SAI, which is shit. I don't forgot already. It's a, let me go back. Statement of additional information. You can request that. You can request that. It's not required to be delivered, but you can request it if you want. So,
You know what in details, as far as like the
oh yeah,
information request.
yeah. So the SAI is, it's fund policies, investment making decisions, the fund's financials, and board member backgrounds. So you know who they are and what they do.
Okay, and then I'm quite sure you have to go through that actual fund to actually get that request.
Yes.
Okay.
So that's the section where we were talking about shareholder rights. You have the right to vote for the board of directors. You have the right to vote on fund-specific matters. You have the right to pro rata share of dividend and capital gain distributions, and you have a right to fund disclosures. So that will be a part of the disclosures. Even though it's not required to be given to you, you can request to have that information.
Okay.
Yeah. So what they have to give you a prospectus. And that also comes with the investment objective, shareholder fees, past performance, 1, 5, and 10-year returns, details on the investment advisor and fund manager, related risks, fund policies, and financial highlights. So those are mandatory. And then they go into like a summary prospectus that breaks it down a little more, and then you got the SII, which is a statement of additional information, and then they have to, the fund itself has to have the SEC do an annual SEC report, and it's publicly available as well. So, and then also a semi-annual shareholder report showing investment summaries, details on the fund portfolio, financial statements, balance sheet and income statement, and then financial highlights, the income, expenses, and returns. So this stuff is pretty laid out. And if you invest into something and any fund and they don't have this information, ask them about it, because you just don't know. And you want to be sure, that you're not in a situation like people are now, recording videos on social media on how, this person scammed them, but they took the money and ran, or whatever the case is. So this is what the SEC is for, to keep these people in check. And when they not in check and you didn't do your due diligence and you were kind of ignorant to everything, then it kind of makes you liable, but at the same time, those people can still get in trouble because they didn't act as a fiduciary by making sure they gave you the information that you needed. Now, Jay Morrison might have did that, but there's still no excuse for not, returning the shareholders' funds and not complying with the investment objective. All of this stuff is important, man. When I say investment objective, there has to be one. When you got pools of money, and you're running a fund, there has to be investment objective, and you have to be prepared to pay if you lose money. That's a risk. So, like I said, I think he got in over his head. He didn't hire the people that needed to be hired to help him be able to run that fund. Not trying to be long-winded on the subject, but this is why these companies are in place. You might not like them, but they shit is professional. They have professionals doing what they're supposed to do. And when they don't, they get in trouble for it. It's that simple. You won't have to, record videos and, you know, on social media and, send them to this person and that person to get your voice heard. Well, no, we just go right to the SEC, file grievances. Listen, man, these people scamming. And it won't take the SEC long to get on their ass. So anyway, man, I don't want to be long-winded, but this stuff may be boring, but it can save you some time, headache, and stress, and keep your emotions in check. You won't be angry and ready to kill somebody because they stole your money. So you know, it's logical and common sense. Um, so anyway, let me see, where was I at? All right, we did returns. Let's see. All right, share classes, right? So mutual funds with sales charge lows or sales charges or lows are typically categorized by class. How and when sales charges are imposed defines their differences. In particular, we'll cover these three share classes. Class A shares, which is a front end load, Class B shares, which is a back end load, and Class C shares is a level load. All right, let's get into, hold on one second. All right, so, all right, first, we have Class A shares, which is the front end load. Class A shares assess a front end load, a sales charge collected when customers purchase shares. This share class is subject to breakpoint schedules that determine the load based on the amount of money invested. Here is an example of a breakpoint schedule. Actually, you know what? I'm gonna just send this to you, Mo. That way you can be able to see. Y'all can be able to see this.
Okay.
Let me see.
How you sending it? Send it an email.
Okay. I was just gonna send it to Facebook. Easier.
Okay, well, tell what you want.
All right. You get it?
Yeah. Oh, this is okay. I see the link.
Okay.
This is what it is.
Yeah. So scroll down. All right.
Where?
So right there.
Okay.
All right. So this is the breakpoint schedule. So with Class A shares, the more you invest, the lower your sales charge, basically. As you can see, breakpoint schedules allow for lower sales charges when an investor purchases more. Funds must offer breakpoint schedules if they assess the maximum sales charge of 8.5%. A customer without the required funds for a lower breakpoint can sign a letter of intent, which is a pledge to make an additional deposit for the shortfall in the next 13 months. By doing so, they can obtain the lower sales charge right away. Using the breakpoint schedule above, assume a customer had $20,000 to invest. They could sign a $5,000 letter of intent, pledging to make the shortfall deposit sometime in the next 13 months to obtain the lower sales charge of 7% today versus 8.5%. Letter of intents can also be backdated up to 3 months to include any previous purchases. Using the previous example, the investor could reduce their LOI to $4,000 if they had made a $1,000 purchase a few weeks before the $20,000 investment. However, backdating the LOI does not increase the time it covers. If an LOI is backdated 3 months, the customer only has 10 months to make the required shortfall deposit. If the customer fails to make the necessary deposit, they will be retroactively assessed a higher sales charge. LOIs cannot be met by asset appreciation. If the position grows significantly in value, it does not exempt the customer from making their shortfall deposit. However, funds provide rights of accumulation, which results in lower sales charges for future purchases. For example, if a customer had $40,000 invested in a fund and wished to make a new $10,000 purchase, they would qualify for the $50,000 breakpoint on the new purchase. Financial professionals must inform customers when they are approaching a breakpoint. Assume a customer requests to purchase $24,000 of ABC Mutual Fund with the breakpoint schedule referenced earlier. The registered representative is responsible for informing them how to obtain a lower breakpoint. They are within $1,000 of the next breakpoint. The customer has a few options: deposit the $1,000 shortfall now or sign an LOI. Either option will give them the lower 7% breakpoint. Alternatively, the customer doesn't have to do anything and can simply accept the higher sales charge. There's an incentive for financial professionals to avoid helping their customers attain lower sales charges. If a customer purchases $24,000 of the fund previously referenced, the firm will make more money on the sale. Let's look at the numbers, sales charge, blah, 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 blah. We already know that. As you can see, an additional $290 is charged if they don't inform their customer of the next breakpoint. If the customer is not notified, the financial professional engages in a violation called a breakpoint sale. Breakpoint sales are subject to FINRA imposed fines and/or suspensions. If a customer is close to the next breakpoint, it's the representative's responsibility to provide them with options for attaining it. The representative must act as a fiduciary by placing their customers' interests before their own. This requires providing the best potential options rather than prioritizing their paycheck. Yep, breakpoints are available to all individuals and some groups of people. Many funds provide householding, which allows families living under one roof to add their purchase together for lower breakpoints. Also, breakpoints apply no matter where or how many different brokers the fund is purchased through. If you spend $10,000 at five different broker dealers on the same fund, it will be viewed as purchasing $50,000 of the fund for breakpoint purposes. Investment clubs are groups of friends or colleagues that pool their money together for investment purposes. Think of them as joint investment accounts for people with similar interests and backgrounds. Investment clubs are not granted breakpoints and are assessed the highest possible sales charge. See, we could have we can have an investment club. But guess what? Negroes ain't gonna invest. They gonna be like, when we gonna get the money back? Or, hey man, why is it going down? Okay, bro, you weren't meant for this. All right. Investors can also utilize the combination privilege, allowing multiple purchases made within one fund family to be added together for lower breakpoints. For example, an investor buying $10,000 of the ABC stock fund, $10,000 of the ABC corporate bond fund, and $5,000 of the ABC U.S. government bond fund would qualify for a $25,000 breakpoint. Class A shares are most suitable for long term investors with large amounts to invest. The more money invested, the lower the breakpoint. Front end loads can be substantial, so it is only suitable to liquidate or sell shares after a long holding period. Otherwise, the investor would lose significant money on the sales charge alone. The longer invested, the better the chance they have to obtain returns that exceed their sales charge. Class B shares, back end. Class B shares involve back end loads, which are sales charges assessed when the investor sells their shares. This load type is also called a contingent deferred sales charge, or CDSC. The longer an investor holds their shares, the lower the sales charge assessed. Here's what a typical CDSC schedule looks like. Uh, I guess most sleep.
Nope.
Scroll down.
Okay.
She said nope.
Scroll down some more. All right there. As you can see, CDSCs award shareholders if their shares are held long term. If a back end load applies during a redemption, the fund will remove the charge from sales proceeds before making payment. Most CDSC schedules have a point where no sales charge is due. In our example, shares held for 5 years and longer can be liquidated with no CDSC. Most fund companies convert these shares to Class A once the CDSC period ends. Class B shares are suitable for intermediate to long term investors with smaller amounts to invest. Longer term investors with larger amounts to invest should consider Class A shares because of their breakpoint schedules. Class A, side note, Class A versus B for long term investors. Sometimes, oh my God, they get beat by 20. Uh, um, Sometimes it's difficult to determine whether Class A or B shares are suitable for a long term investor. As we discussed above, here are the generalities. Class A, suitable for long term investors with large amounts to invest. Class B, suitable for long term investors with small amounts to invest. Furthering the confusion, Class B shares often seem like the better choice. If an investor holds their shares longer than the CDSC period, they pay no front or back end load. So why would an investor choose Class A shares? To better understand this concept, let's look at an example. There are multiple share classes of the MFS Utilities Fund, including Class A and B shares. Let's establish the general fee structure for both. MF Class A shares, breakpoint, boom, 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 boom. B shares, you will have to hold the B shares longer to not get those fees. And plus, the 12B1 fees are higher. I guess everybody can relate to that or understand that?
Of course.
So, all right. Class C shares level load. Class C shares are primarily known for assessing ongoing marketing fees, subjecting investors to level loads. This share class typically does not impose a front or back end sales charge, although some impose a 1 year CDSC, which is contingent deferred sales charge. In this structure, investors avoid a back end sales charge if the shares are held for at least 1 year. The most significant expense for Class C shares is 12B1 fees. This is a marketing fee that aims to lower a fund's overall expenses by bringing more investors into the fund. Most mutual funds maintain a relatively static expense ratio regardless of the amount of assets under management. For example, let's assume a fund with $100 million of current assets assesses $1 million in annual operational expenses. At this asset level, the expense ratio is 1%.
She missed the shot.
Focus.
You focus. The girl missed the damn shot again. Second
Right
game.
quick. Hold on, right quick. Who y'all got?
Oh, man.
I'm watching the girls.
Right now, Dallas smoking Boston, man. Beating them by 24.
Come on, Chris. You play the market. You know what it is.
Yeah. I don't want them niggas to get swept. Boston gonna win at home.
I'm gonna try at least.
Oh, yeah.
Mo, you got any money on the game?
No.
She going for Angel Reese.
They losing by one. She missed. Girl missed the free throw. That's the second game in a row. No pressure. She got all the pressure on her. She lost the game.
All right. Let's see. If the fund could double the size of its assets under management to $200 million while maintaining the same expense ratio of 1 million, the expense ratio will fall to 0.5%.
Shoot. Game over.
12B1 fees are used to grow a fund's assets in hopes of lowering a fund's expenses on a per investor basis. There are two components of this type of fee: distribution fees pay for marketing and promotional services, including advertisements and payments to brokers that place customers into these funds. The maximum distribution fee that may be assessed is three quarters of a percent. Service fees pay representatives to answer questions and discuss attributes of these funds, as all advertisements include contact information, e.g., call us if you have questions. The maximum service fee that may be assessed is 0.25%. Combining the distribution and service fees results in a 1% maximum annual 12B1 fee. Each share class assesses a unique 12B1 fee. These are the typical fee structures. Class A shares low or no 12B1 fees. Class B shares moderate 12B1 fees. Class C shares maximum 12B1 fees. Regulators keenly know that ongoing 12B1 fees eat away at investors' returns. Therefore, relevant regulations do not allow a fund charging a 12B1 fee of more than 0.25% to market itself as a no-load fund. Otherwise, an investor may purchase a fund thinking it is efficient, low fees, while being assessed an annual marketing fee that never goes away. Although many Class C shares don't maintain a front or back end sales charge, the fund company could not market shares as no load because of their high 12B1 fee structure. Class C shares are suitable for short-term investors with the ongoing cost that 12B1 fees present. Long-term investors want to avoid this share class. Although a maximum 1% fee may seem low, these fees are continuously imposed. If an investor held Class C shares for 10 years, they will pay the 1% annual fee 10 times. Technically, 12B1 fees are assessed quarterly, although the fee is expressed as an annual percentage. For example, assume an investor owes an annual 12B1 fee of $100. The fund would charge $25 per quarter instead of a one-time $100 fee. Okay. Let's see. Let's see, man. Oh boy. Wait. Super. Um. There's so much more to go over. Okay, let's see. All right. Subchapter M. Subchapter M, also referred to as the conduit rule, allows funds to avoid taxation. This tax-based rule requires funds to distribute at least 90% of their net investment income to shareholders to qualify. In reality, most funds distribute upwards of 98 to 99% of net investment income to shareholders by the end of the year, which includes any of the following returns acquired on the securities in a fund's portfolio: cash dividends from equity securities, interest income from debt securities, realized capital appreciation gains. When a fund distributes net investment income, it passes the taxation to its shareholders. For example, let's assume a fund realizes a $20 capital gain. If the fund passes through the $20 capital gain to its investors, the shareholders are assessed the taxes on the gain. This may seem unfair, but it's best for everyone. Remember, shareholders benefit when a fund performs well. A fund's net asset value will fall if the fund is required to pay substantial taxes, causing shareholders to lose value. On the other hand, many individual investors will pay lower or no taxes on investment returns. First, most investors are subject to lower tax brackets than large funds, effectively allowing less tax to be paid on the same returns. Additionally, some investors own mutual funds and tax sheltered retirement accounts. These investors will not pay taxes on net investment income received from the fund. We'll learn more about this in the retirement plans chapter. For now, assume investors do not pay taxes on dividends or capital gains distributions received in retirement accounts. Funds that engage in subchapter M are called regulated funds. Damn, Boston came by a shot. All right, closed-end management companies are similar to open-end management companies. Both invest pools of money according to each fund's objectives in hopes of investment returns. However, open and closed end management companies are capitalized, structured, and transacted differently. Commonly referred to as closed end funds, these pooled investments are initially offered to investors in the primary market, then are traded in the secondary market. This is how most securities are transacted on a negotiable basis. Who can tell me what a negotiable security is?
Wouldn't it be like options?
It can be an option, but that would just be stocks in general. A negotiable security is any security trading in the secondary market. I wanted Mo to answer.
She sleep.
Wake your ass up, Mo.
I'm not asleep. What you want?
What's the
What's the what?
what's the negotiable security?
I don't know.
Hey, you funny. Um, Brandon already answered it. So options can be negotiable. Um, Mutual funds are redeemable securities. So the only way you can buy mutual funds is in the primary market, like IPOs. So you buy them directly from the companies that's issuing the shares. Um, Negotiable securities like common stocks, you buy them, from other investors. So, and they trade in the secondary market. Mutual funds do not trade in the secondary market. Only the primary market between you and the issuer. Um, Closed-end funds are not mutual funds, so they are um, like regular common stock. Uh, like I said, this is how most securities are transacted on a negotiable basis, including common stock and debt securities. Unlike mutual funds, closed-end funds are not subject to sales charges, loads. Instead, transactions are subject to commissions. Also, closed-end funds can be purchased on margin with borrowed money and sold short. Mutual funds can't. Um, when closed-end shares are sold in the primary market, the prospectus rule applies. Every purchaser must receive a prospectus, which provides detailed information on the issuer and the security being sold. After the primary market offering, the issuer focuses solely on the running fund. Like mutual funds, the fund manager's goal is to manage assets to maximize their investors' return. Delivering a prospectus is no longer required once the primary offering is finished and the shares are solely trading in the secondary market. Like mutual funds, closed-end funds maintain net asset values. In both circumstances, the net asset value reflects the overall value of the assets held in the portfolio. However, it is not necessarily the basis for transaction pricing. The net asset value only serves as a guide for its market price. Closed end shares trade in the secondary market and are subject to price fluctuations based on demand. If there is an influx of purchases for a closed end fund, the price will rise even if the net asset value does not. Conversely, if there are significant liquidation sales, the price will fall even if the net asset value does not. Net asset values for closed-end funds act just like Kelly Blue Book does for cars. Let's say you plan on selling your car and find it listed for $10,000 in Kelly Blue Book. Your car may have a book value of $10,000, but the market will ultimately determine how much you sell it for. If there's more demand for your car, you can sell it for more than $10,000 and vice versa. Net asset value works the same way with a publicly traded fund. The market price for a closed end fund can be higher, lower, or the same as the net asset value. In the end, the demand in the market will determine its price. Remember, this differs from open end funds at the net asset value is the minimum price an investor will pay for mutual fund shares. On the wrong page still. Passive ETFs. An exchange traded fund. I think everybody knows that. Um, it's technically structured as an open end management company, but it's not a mutual fund. That may sound confusing, but ETFs are unique. While they are structured and operate as an open end management company, they are not transacted like mutual funds. As their name suggests, ETFs trade on exchanges in the secondary market and are negotiable securities. ETFs share similar characteristics with both open end and closed end funds. They purchase and hold securities in a large portfolio on behalf of their investors. ETFs maintain daily calculated net asset values that reflect the current value of fund assets. Due to the large number of securities held in most ETF portfolios, instant diversification is obtained when purchasing just one or a few shares. This is similar to index funds, which are mutual funds that are built to track specific indexes. ETF market prices typically follow their net asset values very closely, even though the shares trade in the secondary market. Additionally, this security can be bought on margin with borrowed money, sold short, and commissions are involved in their transactions. ETF market prices typically match their net asset values due to a feature known as ETF arbitrage. Behind the scenes, institutional investors perform transactions with ETF issuers to manipulate the market price back to net asset value. If it deviates, this fairly complex process is unlikely to be. Oh, that's not important. All right. ETFs are known for tracking indexes. For example, the most popular ETF is the S&P 500 Spider ETF. Investors in this ETF make money when the S&P 500 rises and lose when it falls. This is passive management, which avoids investing in only a limited number of stocks, bonds, or other securities within a market. Remember, indexes track large market segments. By investing in a passively managed ETF, investors bet on the market average. Research and data support this approach to investing. For example, the Wall Street Journal ran an experiment for many years that involved blindfolding its writers and having them throw darts at lists of stocks. A portfolio was constructed with all the stocks the darts landed on. Surprisingly, some of these portfolios performed better than professionally managed funds. A quote from the blah, blah, blah. While the professional averaged higher than the Dow Jones Industrial Average, and the dart throwers, they only edged out 40 from stupid bit. Given professional active management involves added costs and fees, the results certainly make a case for passive management. The Dow Jones Industrial Average is a well-known index tracking 30 of the largest U.S.-based stocks. Active management is the exact opposite approach, which involves picking the best investments available instead of taking the average. Active money managers, like the professionals mentioned above in the dart throwing article, usually measure their performance against an applicable index. For example, an investor engaging in active management and large cap stocks will likely compare their performance to the S&P 500. Come on, Mo, you behind 2 pages. If their investments outperform the S&P 500, they beat the market. Active management strategies seek to consistently beat their comparable index, which is very difficult to do every year. According to the CNBC article, just 26% of all actively managed funds beat the returns of their index fund rivals over the decade through December 2021. If an investor believes throwing darts at a wall produces similar results as spending time and money on research, they should passively invest. ETFs provide an easy way to do this. Today, thousands of ETFs are available that track all different types of indexes. These three ETFs are the most likely to be referenced. Uh, Spiders, Diamonds, and Cubes. That's for S&P, Dow Jones, and NASDAQ. All right. Actively managed ETFs. The first exchange traded fund, the Spider, was listed for trading in 1993. For the next 15 years, only passively managed ETFs were made available to investors. In 2008, the now defunct investment bank Bear Stearns introduced the first actively managed ETF, the Bear Stearns Current Yield Fund. Although the bank would essentially go out of business later that year, it started a new trend in the ETF markets. Actively managed ETFs, or simply active ETFs, allow the fund manager to deviate from their benchmark index. For example, a large cap active ETF will likely consider the S&P 500 its benchmark index, and the fund manager will primarily invest in S&P 500 stocks. However, they are under no obligation to match the exact structure of the index. If they were bullish on 150 other 500 stocks in the index, they could simply avoid investing in the other 350 stocks. Technically, there are more than 500 stocks in the S&P 500. As of mid-2023, there were 503 stocks in the index regardless. Uh, yeah. As we discussed in the previous chapter, active management comes with pros and cons, as an active ETF could outperform its benchmark index if the chosen investments perform well, but the added research and asset management services come at a cost. Therefore, active ETFs maintain higher expense ratios than traditional passive ETFs. Active ETFs are gaining popularity, but passive ETFs that closely track their benchmark index still comprise most of the ETF market. According to Morningstar, active ETFs only comprise 4% of the ETF market, but represent 10% of all ETF inflows as of December 31st, 2021. You should assume passive ETFs are the focus of general. That's nothing. All right. Inverse and leverage ETF. Investors betting on market downturns or seeking to amplify their gains could purchase inverse and or leverage ETFs. These investments come with considerable risk, which makes them suitable only for sophisticated investors. The inverse bear ETFs provide the inverse or opposite return of the index they track. For investors betting a market or sector will generally fall, inverse ETFs can be utilized to make a return. Here's how these will work. An investor owns an S&P 500 inverse ETF. The S&P 500 goes up 3%. What is the investor's return? I guess somebody's going to answer that. Anyway, leverage ETFs provide amplified gains and losses to their investors. 200% and 300% leverage funds are the most common leverage ETFs. 200% leverage ETFs amplify gains and losses by a factor of 2, while 300% Leverage ETFs amplify gains and losses by a factor of 3. Leverage inverse ETFs also exist in the market. In essence, they're leverage and inverse ETFs molded together as one. Leverage and inverse ETFs come with considerable risk. Okay. Inverse and leverage ETF returns can be amazing or terrible. Even the most sophisticated investors should only maintain an investment in these ETFs for short periods. Not only are they risky, but they come with substantial costs. Although you don't need to know the specifics, it's expensive for funds to obtain inverse and leverage returns. Bottom line, inverse leverage and inverse ETFs provide ways to make or lose quick money based on market fluctuations. Exchange traded notes, or ETNs, are technically debt securities, but compare in contrast to exchange traded funds. Both securities provide returns based on the performance of an underlying index, but they do it in different ways. When an investor purchases shares of an ETF, they gain ownership of securities in the fund. When securities held in the fund increase in value, the ETF increases, and vice versa. The securities in the ETF's portfolio are structured to match the index it tracks. For example, the Spider ETF contains 500 stocks, part of the S&P 500. Simply put, ETF owners make money when their investments rise in value. When an investor purchases an ETN, they loan money to a financial institution. Officially structured as a debt security, an ETN represents the promise from an issuer to pay its investors the return of an index. Unlike ETFs, ETNs maintain a maturity date. This is the day the issuer must pay the index return to the ETN holders. Because ETNs are considered debt instruments, they are subject to default or credit risk. If the issuer goes bankrupt, its investors could lose their entire investment. For reference, here's the story on Lehman Brothers ETNs. Conversely, ETFs are not subject to default risk as they represent ownership of the underlying securities in the ETF, not a promise to repay borrowed funds. Like ETFs, ETNs are negotiable securities that trade in the secondary market, can be bought on margin with borrowed money and sold short. Additionally, both securities are tax efficient, although ETNs typically subject their investors to less taxation than ETFs. Because there is no ownership of portfolio assets involved with the ETN, there are no dividend or capital gain payments. Therefore, ETNs are only taxable when sold at maturity. Unit investment trusts, or UITs, collect money from investors and invest those assets to create fixed portfolios of securities. Like all other investment companies, UITs aim to maximize investor returns while adhering to the stated investment objective. UITs are required to be registered with the Securities and Exchange Commission, SEC. Part of the registration process requires a prospectus to be created and made available to investors. This disclosure document includes the following: investment objective, investor fees, and related risk. The issuer, sometimes called the trust sponsor, uh, registers the UIT and typically picks the investments for its portfolio. The prospectus includes guidelines for the trust sponsor to follow. Um, For example, the trust sponsor will only consider investments in speculative grade corporate debt securities. To better understand how the security works, the Guggenheim Balanced Income Builder portfolio, um, yeah, whatever. UITs always maintain a maturity date. In this case, the UIT will liquidate after 2 years. The inception date is April 20th, 2023, and the maturity date is April 21st, 2025. At or just before the inception date, Guggenheim will build a portfolio of securities that generally stays fixed. This particular UIT invests in dividend paying common stock and fixed income based exchange traded funds. These security types pay dividend income, which is passed through to UIT investors monthly. Once the portfolio is set, it generally remains fixed. The trust sponsor may be granted some ability to take action in the portfolio if an extraordinary event occurs. However, most UIT assets are set and stay unchanged until the liquidation date. Therefore, UITs do not assess management fees. They do impose sales charges, operating expenses, and creation and development fees. C&D fees compensate the trust sponsor for establishing the investment objective and creating the UIT portfolio. For reference, Guggenheim Balanced Income Builders Portfolio fee table is on page 10 of the prospectus. UIT investors have two general choices while holding their investment. They can hold the UIT to maturity, the date the trust sponsor liquidates the portfolio and distributes the proceeds to investors. Conversely, investors can redeem their units at the current net asset value with the issuer before maturity. Either way, the payment received by the investor represents the current market value of the securities held in the UIT portfolio. Some UITs allow in-kind distributions, which send investors their share of the securities in the portfolio. For example, assume a UIT is comprised of 10 separate shares of stock with a total market value of $1,000. An in-kind distribution would provide the investor the 10 shares of stock held in the portfolio instead of liquidating the shares. Comparison to all right, that's it on that. All right, that's it. That's it for mutual funds and open management companies. Huh?
Yes, another question.
Who got a question?
I was asking, did you have another question? Or you just paused?
I think you finished it, Mo.
Oh, got you.
Yeah, that was all for mutual funds, opening and management companies.
That was a lot.
So I was going to ask you, Chris, reading all this, does that make you want to get involved more with mutual funds or less with mutual funds when it comes to your trading?
More because you know, I ain't got to watch it, or I ain't got to pick stocks. I can have somebody else do it and just pay the fee for it.
So do you know what some of those fees are, or is it just like one fee that you have to pay for a mutual fund?
It's like it's called like a wrap fee. So they put all the fees together of everything, and then they just that's what those front end loads and back end loads was talking about. So you pay when you sell, I mean, and all of that. And they just wrap it all together instead of just charging you one by one for everything. So, just reading about the different things that you can invest in, that you don't normally hear.
Mm-hmm. Yeah. No, just listening to you go about mutual funds gave me an idea of basically strategizing and trying to amplify or um, enhance my long term portfolio.
Yeah,
It covers
I,
the
I
same what mutual funds and index funds and
yeah,
integrate that with options. Just
yep, all of it, man. That's something people don't talk about a lot, but you know, Squawk Box, CBNC, this they talk about it all the time, but you don't ever hear really people really talk about buying mutual funds like that. So you just paying, you paying for a service.
right.
You know what I'm saying? You
Just
paying
hoping
that.
for a better return.
Yeah. And you get all that information at the beginning. You know what I'm saying? So you can choose, if the returns don't look good enough for you, you ain't got to invest in it. So I didn't even get into the DPPs or the municipal bonds because I didn't want to be long with this shit. Because this part, I knew this part was gonna be long talking
Mm-hmm.
about, which I was initially gonna. I was gonna start off with the municipal bonds, but the mutual funds is good, man, for people to invest in because. Especially if you ain't got time and you're not really knowledgeable about stocks like that, you can just invest your money in a mutual fund and reap those benefits: capital appreciation, growth, dividend, and then capital gains. Dallas hitting everything, man. uh but I bet you Mo ain't paying attention.
No, I don't think so.
What?
Yeah.
You tell Mo to get a mutual fund, she gonna be like, what's that?
I already got one. How about that? Now, while you over here
Mo gonna be like, how much is it?
playing
Five
around.
dollars. $5. What?
Don't be worried about me. Be worried about your own bank accounts and
I am.
what y'all got going on. Because that's what you better do.
No, 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 no. Get all that.
Because I can't help you.
You
Yeah,
can't,
you
or you
can.
Mm-mm.
Yes,
invest in
you
something else.
I got going on. I can't help you.
Oh yeah, you can.
can you say what's more?
Mm-mm.
She said, uh-uh.
Mm-mm. I can't.
Why not? You can help the white man.
Who?
Who?
I don't even know no white man. What are you talking about?
Oh yeah, you know the white man.
I
Oh
don't
yeah,
even.
you
I
well
don't even know. I don't even know any. You know, one of the reasons I watch a lot of the Country Wayne skits because they all, you know what,
Say what?
majority. They only have one or two of them in there.
Oh yeah.
I always watch all of our shows. I'm very biased. I'm sorry. It's just in my it's just in my nature. You know.
Yeah.
I do my best to keep my eyeballs acclimated with those who look like me. I hate
Mm.
the fact that I can see the difference between me and my nephew and where they go to school, and my niece, where they went to school and where I went to school. And the difference, I have to educate them. I have to put them on this stuff a lot of times.
Yeah.
I'd be like, hey, that's not going to work for you right there, okay?
Mm-hmm.
I know what you think. I know what they told you, but that's not how it's going to work. We're going to have to do it like this. I think you have to be honest.
Yeah.
You have to be honest, you know. I don't need to let them. So everything you get, you're going to have to earn.
Mm.
It's not going to be that easy like it is. You got high school students driving Teslas. Hey, boy. My nephew said, "Auntie Mo, I changed my mind. I don't want a bug. I want a Tesla." I said, "What you gonna do with it? You can't even charge your phone. How the hell you gonna charge a car? The hell? You gonna be on the side of the road? Boy, sit down somewhere. Talking about
Hey,
you
you
want
better
to
let Zion have it. You
shit.
got a
Who gonna go?
Genesis.
Who gonna go get him? Who gonna? Yeah, Genesis go with fuel. There's fuel stations everywhere. Who the hell gonna go get him if his ass not paying attention to his car and it's not charged?
Oh, he gotta pay attention.
That's what I'm saying. He don't even keep his phone charged. What are you gonna do with the Tesla? My point. You know. Oh, ATMO, I want a big house in the gated community. I said, for what? So you can pay that damn high ass mortgage? They get you something comfortable, go sit down somewhere. It's not that serious.
Mm-hmm.
Well, go put yourself in those situations trying to be like be like the people across the strikes. You crazy. I'm so glad I didn't do that. Are you playing? No way. But hey, that's how the thought is just sight. What you see on sight. I say, oh boy, them people living on the credit cards. Go sit down somewhere. He said, what? He said, what? I said, he living on credit cards. Because if you telling me, unless somebody left you trust fund or left you dollars, you in these gated communities and how everything has gone up, those places are probably $3,000 mortgages.
Mm-hmm.
Everything has gone up. I don't care if you make more than me. If everything is going up, guess what? That means they tapping into your pockets now. We ain't had no pockets to start. We ain't got none of that. So if they ain't tapping in my pocket, they tapping into yours. And you got all that expensive stuff. You got boats. You got these big ass houses with two or three AC units. Utilities is high. You know what I'm saying? So there's a lot going on with that. That's credit card. It's been credit cards.
Right.
They regular everything and don't let one of them not be working. Oh shit, it's even worse. Credit cards all day. Boy, don't come over here with that. It's like what? I said, ask the kids. They'll tell you. What your parents swiping over there? American Express, Discover, Capital One, Visa, writing checks, hoping that the money get to the account before the check clear. Come on now, don't get me started. I worked with them. I'd be trying to figure out why they still working at 70 and 80, 60.
Yeah, that's great.
Yeah, I mean, look around. Sometimes the people try to make it look like that they have a better advantage than us, but they don't. Because check it out. Look at the ones in the world. Why are y'all still holding down jobs at 60 something years old? Competing with college kids, upset because there's more technology now. Because they can't quit.
Mm-hmm.
They got to. The expenses are too. When I was working for the state, I kid you not, it was only probably, let me see, when I first started, I think I was in my 30s, probably 30, 39. And it may have been two of us, if that. And the next age up was like 55. And then it was older, 60s and 70s. And I used to ask them, like, why y'all like grandmas? Like, why y'all still working? And they say we can't afford to quit. They used to try to retire. They had started what they call a terror program. And that's where you could get if you retire, you would get like, I think they would give you like 300K up front, and then you would take like 75% of your retirement, right? And they had to revamp they revamped, like when a whole bunch of people was getting ready to retire the second wave, they revamped the program, and so it caused them to lose some money. It sounds like a lot of them, they would retire and they would come back and work as a temporary employee. And so I'd be like, why y'all work? Why y'all come back to work? You know, you in your sixties, I would think that you would kind of be winding down, kind of enjoying your last 20, 30 years left on this earth, right? For some
Mm.
majority of people, right? And they would be like, we can't afford it, too much going on or whatnot. And I used to be like, damn, I remember I used to look at that and like, okay, how can I avoid that? You know, like if you still gotta work, I mean, think about it. Now you kind of hide it because you could get like some type of uh home base job. There's a lot of IT stuff. There's a lot of call center stuff. Help desk or whatnot. But for the most part, a regular 9 to 5. You got all these young people coming in. They gonna give you no more money. They gonna hire those people over you. Because
Mhm.
you don't have the technical skills. You don't have the Microsoft suit skills. And as simple as that is, a lot of people still don't know. So a lot of people still don't know Word, Excel, PowerPoint, that kind of thing. Or they just don't know how to maneuver the technology, right? And so you got now you competing with these young folk, and then you're mad because young folks don't have no decorum on the job or whatnot, or they don't never come to work, or they always calling in, you know, for
Mm.
whatever reason, or they jump ship so much and it always leave you with the high workload because you're always getting somebody new and trying to train. And so you sit back and you think about all that stuff in reference to what you're talking about, investing in mutual funds and the
Mm.
different types that are out there and the different opportunities and different ways to be able to be successful with it. If you try to get somebody right, if you just did a survey of your immediate circle of friends
Mhm.
or individuals you work around, and you ask them, are they prepared for retirement, or how long will they work, and if they have a retirement plan, can it sustain their immediate household expenses? I'm not even talking about their lifestyle. I'm just talking about food, clothing, shelter. You know what I'm saying?
Mhm.
And then your basic vehicle need type of, because you need a vehicle in many places. You need a vehicle, and
Right.
most of those people would be like, "I never thought about it.
Uh,
Just never thought about it." And I hope that I have something in play or whatnot. And that's why when they did that show the other day, they talking about people using marriage as a retirement plan, or women marry men that has a certain caliber of money. Because I mean, think about it. We talk about financial literacy, but shit, let's talk about how to just sustain life, period.
right.
you know, Whether you got kids, when you so I've got a good base with Zionist and I on reference to saving for certain things and getting involved in certain things, and they're doing pretty good with it, right? But it took a minute, because they just saw money as, okay, you get money, you spend money, not as, okay, well, you're gonna be 30 one day, or you're gonna be 40 one day, or it ain't about just getting something just to buy a vehicle or buy a home.
Right.
What are you gonna do? Like right now, my mom, I think what's my mom? She's 65, I think, or whatnot, and she still works. She still do work or whatever, but I'm sure I'd be like, man, don't you want to start working? But in the same sense, she had to get to a certain point so she could get a certain money or whatever, because a lot of the beginner years it was more of how back in the day, I don't know, y'all younger than me, so y'all may not remember, but a lot of older people got paid cash back in the day. Some of them didn't hold regular jobs, or
Mhm.
whatever they were doing. And a lot of times they avoided taxes, right? They did that to avoid taxes. Or maybe the husband was doing everything. And this is why I'm against both parties not being able to have something, because if life happens and things change, just think about it. I was looking at the SPY today. And I was like, damn, the SPY had like what, 500 some bucks, right? And I remember when we were first, well, when I first introduced to the SPY, it was like two something, right?
Mm-hmm.
And
Yeah.
that's yeah, it's 542. So the SPY is 542.78, right? And I remember way back when the SPY was like, I think at the time it was like somewhere around the summer, and it was two something. Let me see, 2020. No, I'm not talking about the COVID years. So we can go, right? And I was like, man, the SPY 542. But if you would have introduced someone and they would have just had just one share of that, they would have doubled that. But to get people to kind of understand that your money grows over time and that you should put something in a way so that you can have something later, man, it's a hard bargain. And so the only way you can really survive without investing mutual funds or whatever route you decide to take is to try to get some type of retirement in place. But look what they're doing with retirement in many companies. They firing you before, when I firing you, or letting you go with a service before you even get to to retire, to draw a check. And then those who are in government, they're downplaying them, or they're reorganizing so they don't get the money for that retirement. So
Right.
it's crazy. And if you try to explain that to a lot of people, like, yo, you just sitting there chilling and because you got a job, but you better be having a plan.
Fact.
Yeah,
You ain't lying.
put your money to work.
Yes. And if you don't, like I always say, if you don't know, then but you still have to do something. And even if you did mutual fund where you put your money in, you get that certain interest rate or whatever working for you a certain way, then do mutual fund. If you all you know is a CD because you feel like that's less risky, then do that. But you gotta do something. You can't not
I
do nothing.
agree.
And if you don't do something, then guess what? Then you be like what we see happening now. Generations that are still working. Because think about this. I was watching, there was some grandmas, right? And so I was like, man, the grandma got the grandbabies. And I'm like, okay, if you were the grandma and you got the grandbabies, that means you probably just retired or whatever. And then you got your grandbabies, so you French raise your kid, now you gotta raise your grandkids or whatnot. And God forbid you're grandma and you gotta work and you gotta help with the grandkids.
Yeah, that's tough.
Oh, and that's a lot of people. Like I have a friend, she just lost a job, and I was like, man, come on, I need you to. There's some stuff I can get you to do because you're very knowledgeable. I mean, very, very knowledgeable in taxes. She has a tax company. But man, she's so afraid. She's so afraid to do her own thing. And I'm like, what if you can't get another job because you grown now. You're not these young girls coming out of college. And even though you have the skill set and your resume is good, guess what? You up against a different hiring generation. They used to hire based on experience and skill set. Now they hiring to keep money in their pocket. I don't know. What do y'all think about that? I used to think, before it used to be, oh, I'm gonna hire the best person. This person got skills. This person gonna be able to bring me revenue. Shit. Now they like, you gonna cost me 60. She gonna cost me 25.
I think that's what it is. Boils down to the actual company, like who can they get cheaper, basically, run
Yeah,
to keep their company running.
yeah. Like who's gonna help? Who's going? Hey, they just trying to. They just want you to do the work. They not concerned. They like, this person over here gonna cost too much.
Yep.
So how do you deal with that? And that's why you be like, yo, you better have a plan and don't be so quick to go and level up when you don't know if you leveling up and you don't have a plan that's sustained, then don't level up. It's unrealistic.
What you mean by
I have a
leveling up, though?
like for example, you get your first home, people call them like starter homes, right? That when you get your first home, and let's say you get a raise on your job, you get two raises on, year go by, 3 years go by, you get another raise on your job. So boom, now you're making more money, you got a little extra dollars. You say, you know what? I want to get another house after 3 years. So you level up, you get something bigger.
Gotcha.
But why? Because you don't know if you don't if you we can't foresee what's going to happen in the future. So why not get something comfortable that you can live with? And then if you want to sell it and get something else and leverage it, or however you want to do it, then yeah. Or if you want to use it as investment property. But if you just sell, or you just keep it, or you mean you sell it and then you get something else, and you're paying more money for what?
Mm-hmm.
For space you're not even gonna use.
Yep.
Now, if you did some entertainment space, like I was thinking, I said, man, if I had to do something, what would I do? You know. So the only thing that I would really be missing is like an entertainment room, right?
Mm-hmm.
Somewhere you can go, you can entertain without being in your home. But if I had it to do all over again, having that piece of it, otherwise, there would be nothing else I would need to do, because I would rather be paying less and having more to do what I wanted to do than paying more and trying to, pin a picture save to do something. So, I'd
That's
rather I'd rather, like, if I compare my home to like a lot of my buddies, they got like 5 bedrooms, 4, 5 bedrooms, and it's just them or whatnot. But and they got like 2 units, 2 AC units, this, that, or whatever. And I'd be looking at some of the things they be having to do and repair, and I'd be like, I ain't gotta do none of that. Cause they went from little starter homes to larger homes, and I stayed where I was. I was like, I don't really have to do that. And my renovations are very cheap because I don't have all of that going on. But in the same sense, now them same individuals are getting up in age and like, well, you know what? All I really want to do is travel. I don't really have, kids are gone. I don't really have that space. And so what they would do is they're not like, you know what? I want to downsize. Now I want to get a smaller home. I don't need all this no more. Entertainment's gone. I'm just trying to enjoy life. I
mm-hmm.
say, man, y'all wasting a lot of money doing all that extra stuff. And it's not like you got kids, once your kids are grown, unless you just wait for them to come back and visit, type of thing. But just growing your money, period. And at what point do you do it? And what point you're comfortable to do it without withdrawing it? But like it's funny how you can have a job and invest in your 401k or your TSP or some type of company investment and have no problem with sitting that money and not touching it. But if you do it on your own, you have a big problem with taking the money and putting it in your investment account.
Yeah.
It's like the discipline. If you have access to it, it's like, oh, I'm gonna do it. I'm gonna do it next pay period, or I'm gonna do it next pay period. Oh, I'll wait. I'll wait till May. You know
It's
what?
I think it's some of what you said already is that discipline, and then I think it's a compass of that fear when you withdraw that money without that brokerage account.
Mm-hmm.
You think they're gonna take all that money out of your account, or they're gonna take those fees out, and I think that's what a lot of people are afraid of, those fees. Oh, how much are they gonna take out of my account? Well, if I got 100,000, they're gonna take out what, you know, $5,000 in fees. So they just leave it in there.
And that's crazy. If that's the case, you go and kick that little money and keep it pushing, you
Right.
know. But the point is to keep it in though. And you just use a little bit at a time. But I guess the hardest part, shit, 100,000, you give people to five, you doing good.
Yeah.
5,000, 10,000. And in many cases, you'd be surprised on the individuals who just can't. save, period. That you have to go. So that's why the pandemic was so hard for many people. And that's why many people thought they did great during the pandemic when they was getting those extra, unemployment checks or, PPP and all those different things and whatnot. And even then, that was a level up come up for them, and they didn't even save that or some of that. You knew if you was getting $900 a week or $700 a week, most people wouldn't even get that on without the pandemic. Why wouldn't you a week, Brandon? That's for many people that was a lot.
Yeah.
And they didn't even save any of that.
They felt there was free money, they can do whatever with.
Right. And then now here we are later where it's been wore off. Now it's like, oh, somebody called me. This lady was getting evicted. She had like 10 days, 2 kids. She had nowhere to go. Right. Mm-hmm. And in my mind, I'm saying, now why they calling me? What I'm gonna do? Like it's almost like you're not thinking about this. You got kids, obviously. I know you got family somewhere. And if you do, then you better, bite your tongue, apologize, say something.
Yeah, they gotta have it. I mean, I guess money's like I know money's a drug, but I mean, yeah, basically money's a drug that, can't be kicked. Because everybody's doing it. Everybody needs it.
Yeah. Everybody need it.
They ain't doing it well enough if you're homeless.
Right. And those are the ones who have bad habits.
Yes, that's what I'm saying. Like, who you done pissed off? Like, right. Come on. Like, at some point, you got to know that you're going to need some help. Like, it's sad. It's heartbreaking, but you be like, dang, like, how you get here? When it say sis, you're like, okay, there's some things you can do, but you're going to have to work for it. Look, Rambus just says in the chase, said, "Mo, you ain't lying. My 86-year-old dad got his state pension cut like 10 years ago. They do you dirty." Yes, they will take your money. And that's the thing. That's why, when you think about a plan, like, okay, like, I gotta watch these folks because they'll try to get, like, where's my money coming from? If I'm about to be approaching retirement age, like, okay, so I'm not against. Listen, shit. I had a lady. I'm not against people marrying to damn sustain. There was a lady, I think she was in the 80s or whatever, and the guy was in his 80s. They got married. They said, we need to put these coins together. Look, at the end of the day, I'm not saying the Wicked Witch of the West or somebody who, man. Dude, I'm not talking about the ratchetness and individuals who just gonna abuse the privilege of it. I'm talking about listen. If I wasn't dating, right, and the older I had already had a plan. Shit, I knew exactly what I was getting ready to do. I was like, forget this. I'm gonna learn to love you later. I'm about to scope. Let me scope out one of these little vets. One of these. What I did, I had a plan, honey. I was like, let me scope out one of these little vets, these little ones that just be chilling and they volunteer and they don't bother nobody and shit. Okay.
I was on a hunt.
What? I got a check. You got a check. You get this side of the house. I get that side of the house. We gonna hang out. You don't want to be bothered with me. I ain't gotta be bothered with you. If you want to be bothered with me, I'll be bothered with you. Too easy.
I'm sorry, man, them people is low level, man. I ain't worried about them.
We funny, please. We listen. Whatever. I was gonna be getting it. What y'all sitting around here being too cute? Okay, we ain't got time for that, honey. Let me tell you something. Whatever. Listen, my niece graduated. Her granddaddy rolled up here He's 68. He rolled up here with a 24-year-old.
No, he didn't.
Yes, he did. And
Damn.
guess what? They live together, and it's black. They live together.
Damn.
They be chilling. They don't bother nobody. He said
Look
she
at
don't
that.
have to. She don't have to want for nothing. I hold her down. She hold me down. He said, "I know y'all looking at me like, what are you doing with that little young woman?" He's like, don't bother us. We ain't bother y'all." I
Look
said,
at God.
He
you
said,
better
"Look,
do
he
your
God."
thing. Yo, chilling. Said, I ain't got them problems.
They gonna
Like,
be calling that man nasty and everything.
he ain't care. He's a Marine, retired Marine. He ain't care about that. He got a little girlfriend. Shit. He said, I told her, listen, now, if I give I give you something, you say your little cash for the rainy day. He said, because I'm telling you, if something happened to me, my kids gonna kick you out the house.
Uh,
Mm.
You better have you something. He said, you better have you something. Look at him, just say Viagra, the sugar daddy. Hey, shoot. He had this little young woman. I said, 24? Child, she was chilling. She wasn't worried about nobody. She didn't care nobody would talk about her or not. She was getting taken care of. She wasn't worried.
Yeah, I bet she wouldn't.
Yeah. Hey, I guess she's like, he got that pension. I'm like, girl, just take a policy out on him and chill out.
Well, he got that
basically, that's
paper.
it.
Huh?
I was
What
gonna
you
say,
say?
basically, that's it. Just take that
Yeah,
policy
that's
out of
it.
there.
That's it. Ain't nothing else you can do. But
He
in the
got that
same
paper.
sense, shit, he might outlive her. Who knows? You know? You know?
He said it right. He just might.
Yeah. I mean, when you think about the plan though, think about the plan. I was like, okay, I'm pretty good, but anything pop off, them checks stop flowing. Shit, I've been in the same line with everybody else. But they always got that to my. So now I'm trying to get my niece and nephew to understand. I was like, listen, I don't care about whatever job you have. You have that, but you still need to learn how to make money. You still need to
Mm-hmm.
know how to make money outside of a job. Because if you can't make no money outside of a job, you won't get lost in the shuffle.
Yep.
You
That's right.
know,
Right.
why you think you see a lot of those? Well, I don't know you guys. You guys may not go to the flea market, but when I go to the flea market on the weekends, I see a lot of a lot of older people there. They either selling, they could be selling scraps or hand me downs or candy or whatever. Right? They out there chilling, selling what they need to sell or whatnot. That means I'm sure they probably got their home front taken care of. And even if they don't, shit, they be out there getting their little hustle on. And the Mexicans be out there.
100%.
Oh yeah,
They stay out there.
doing what they do. They showed on so even Reverend says I'm 44 dating a 33-year-old. I feel that's too old. She joining me camping tomorrow morning. Hey, I absolutely love camping. I bet you guys gonna have a good time. Do your thing. You know,
Mm-hmm.
everybody need a little security. Make sure you open her up a mutual fund. He said I'm
Who?
in the tent right now, working on the stick fort all day till it started raining.
Uh-uh.
Big fort, hey, do your thing. Listen, better get that girl a mutual fund.
He better get her own self one.
You get that girl a mutual fund. Well, if how you not want to get something? So if I was date, well, I do date, but if I needed to, I would get my boo an investment account.
No, you ain't married to him.
So that ain't the point.
It
We
is the
together.
point.
We
I
together.
ain't
Who
giving
says you gotta?
nothing
Who
until I
said that?
put.
Who said the judge had to validate? Who said the judge, the minister, the preacher had to validate something for us to work together?
It ain't
For
about the
us to.
validation. It's about the paperwork.
What about the paperwork?
Marriage is just another business.
That's right. Say it again. Look, Reverend used to say I made her get
Exactly.
life
That's what
insurance.
I'm saying. It's the paperwork. If you want, man, see, okay, I get it from this vantage point. if you you don't want kids, great. You may not have to do that. But as a man, if you want a legacy, you're gonna have to put a baby in somebody. And the best way to do that is to get some paperwork. If you got assets as a man, you own shit before you come in a relationship, write this shit down. That's the problem with niggas. They don't write shit down and they get took for all their damn money. I ain't letting no female take money from me and what I built. So I will willingly give it to you, but you ain't finna take shit. So I'm write the shit down. Like, listen, if you make it this far, this is how much you'll get. But if you don't make it this far, you ain't getting nothing. If you don't write that down, then it ain't gonna mean nothing. You're gonna get raped in court. So I'd rather put everything down in a document, have paperwork, to save myself the headache and stress.
Well,
your people are already dealing with that now. Your entertainers, they coming for their paper, and they dead and gone. They estate. But because why? They didn't have a beneficiary.
yeah,
So
you gotta have
anybody
that.
can come claim your shit now.
Well, yeah, you gotta have that right now. You definitely gotta have that right, and it play, all your assets and how you want it to get down. But what I'm talking about, well, what I was saying was that I would. You said, why would you? I would if my friend didn't have any investment
Your
thing.
who?
My
Your
friend,
who? Who
my
is your
friend,
friend?
my boo, my boo.
Boyfriend?
Yeah. If
I
he,
heard friend, Brandon. Did you hear that too?
oh my God, it's the same thing. You sound like Zion. Goodness gracious.
Nah.
You sound like Zion now. Your friend, that's your man. You need to say your man. My man. I'm like, oh my God.
Hey, what do you do to get in trouble? Why you your
Potato,
friend all of a sudden?
potatoes. No, I don't. Well, you see, I don't look at it in that context like everybody else do. If I say my friend, that's like my main thing. That's my squeeze. I don't do it the same way everybody else do it. So it doesn't take on the same context for me. So that's why I be tripping when people be like, "What, your friend?" Yeah, what do you mean? I ain't calling you friend.
Mm,
I probably say my homeboy. This guy I
right,
know. Yeah,
right.
I don't refer to y'all like my friends. I don't say that. I'd be like, "Oh, that's my homeboy. I'll be on YouTube with." But if I say my friend, you'd be like, "Oh, something,
Mm.
something going on there." But I don't know. I just have a different context. So sometimes I have to watch myself and who I'm talking to. So people take it. Okay, my man. Okay, my man. How about let me say it like that? My man, my man. My man, my man, my man.
Oh, you got that from old girl,
Country.
man.
Yeah, Athena. My man, my man, my man. Yeah. So I would
No.
we talk like this though. We'll talk like this. We'll be like, okay, if we'd be like, if we win the lottery, right? This is what we're gonna split it, then we're gonna do with the money. If I think I'm a little bit more generous than he is, right? So I would get, but
Mm-hmm.
even now though, when I first when we first like maybe the first year, I was like, yo, you got a brokerage account? You don't got a brokerage account? Let's put some money in the brokerage account. We can start saving right now. Even if we don't get married, guess what? We just split it up and keep it pushing. But that's me though. I have a different mindset than most people. I'm not looking at it like something's gonna happen. I'm looking at it like, man, we need to save right now. We might need something, or we might want to do something, or we can save for whatever, right? Or let's get an insurance policy. We can take that money out and buy what we need when we ready to do what we do. I never said if I got married, man, I'm not spending money on the way for what? I ain't wasting my money. Hey, the most I'm gonna waste is enough to feed your butt,
Hmm.
feed your butt, and be entertained. What 20 who? Now Monica, mm-mm. Might spend that 6K to go on a destiny wedding, but that's about it. You don't get no more than that. It ain't going down.
Right.
And you're lucky if I do that.
No,
I,
bro.
I got
Remember,
better places. Huh?
I I posted that article, and you was like, nice. I was like, no, bro,
Oh,
that's not nice.
the girl.
Because the dude, yeah, because the dude, what happened was the dude had died, and his girlfriend from way 20, 30 years ago was his beneficiary on his retirement.
Mm-hmm.
And they was trying to give her the money. I'm just like, and she was trying to keep it. I'm just like, man, you don't fucking get to keep that money. You ain't with this man. You with somebody else trying to keep that man money. Give that money
Hey,
to his family.
that happened to my uncle.
Oh no.
It ain't. It ain't. Listen, if they don't change that paperwork, you can't get mad at them because the person did that. They can't put themselves on there. Man, my uncle died in Houston. My uncle died. Shit, that girl was the beneficiary. Huh? She was like, "Oh, wait, you say word? I'm the beneficiary? Shit." She was like, y'all better bury him the best way y'all can. And his company ended up paying for his funeral. So he had one in Houston and then they drove him down to Louisiana and had the funeral there. And the only reason his son ended up with his Corvette was because it was at his house that day or whatever, or she would have had that too. My uncle neglected to change the paperwork. He neglected to
Wow.
change the paperwork, and I mean, she got it fair and square because she was the benefit. My cousin, one of my cousins, her man at the time, had her as beneficiary, but what she did was she didn't do that. She actually did right by him.
Mm,
Took care of what she needed to take care of his son or whatnot. Um, and then my mom, the guy she was gonna marry, she was over all his stuff. Right, they were supposed to get married like 3 months later. He died 3 months earlier, and that she had everything, and the family was like, "Damn, we ain't gonna get none of that." Mom was like, "Nah." She's like, "I'll keep the cash. Y'all can get the rest. Just give me this portion of the cash. Y'all can have everything else. Y'all can have the insurance policies. Y'all can have this, that." She's like, "Nah, I won't do that to y'all like that." I was looking at her like, "What?
that's
You
wild.
crazy? I don't know if I can do that. I probably would not. But y'all are different." You did it. My mama did it. She gave it. She gave it. She took some enough. She took enough to buy her a house, and she gave them the rest. She gave them the insurance policies, the vehicles. I think he had like 3 vehicles, a home. Just a whole bunch of stuff. And she just like, "Nah, you guys can go ahead." And they was like, "Are you sure?" She was like, "Yeah. I just want enough to give me a house, and that's it." And that's what she did. I said,
Mm,
"Girl, you strong. You a trooper, not Monica. Don't do it." But that's why
mhm.
I have more than one. I have 4 insurance policies. One for my parents, if they still around. One for my brother. One for my niece and nephew. And then I just got a recent one, and I said that if I got married, that he can have that one, or I get another one that's worth more. Well, try to get another one that's worth more, and I'll give it to them. Like I would, all my stuff is already separated. Houses and things
Mhm.
of that nature. Well, this particular house I'm in now, that's gonna be for my niece and nephew, so he won't be able to get this. But anything new, he can get that. And I told him he could do the same thing. I won't.
Mhm. Mhm.
We have the tough. People sometimes it's hard for people to have those tough conversations. Chris, when you was married, did y'all have that kind of conversation about how
Yeah.
you split your money
I was paying all the bills.
if anything happened?
Yeah, I
So
mean,
she didn't
I'm gonna
work.
die one. She initially she did, and then for a couple months she didn't, and then she got on somewhere else. But shit, I
Mm.
was paying all the damn bills.
Mm.
Shit,
Is
I
that
was
she
like
wasn't
doing that.
working?
Oh,
She wasn't working because she couldn't work, or she just the type of career field she had.
listen, glad you asked this question because no, she was working when we first started dating. She was working, and then she was like, "Oh, I got me a good nigga. He works security, and he do personal training too. So he got money. But she was already my home girl. We was cool already, so it wasn't even nothing like that. But she was working and then she ended up getting fired. I was just like, there's some weird shit happening, bro. Like, I don't know what's going on, but she started doing DoorDash when DoorDash really started kicking off. They
Mm-hmm.
weren't public yet. So and then she had got on Comcast after that. So it was kind of a little inconsistent, but towards the end, she was settled in at Comcast. I was still doing my thing. But you know what this woman had the nerve to tell me, man?
What?
Last year, she hit me up out of the blue. And this is why I know I had to go back down this road, and I'm going to keep it short. She basically said that, she was tired and she had support, so she didn't want to do nothing.
Oh, that was your signal to let her ass go.
Yeah.
Wait! I missed it. I didn't get it. Wait, what
you,
happened again?
you missed it? You
Yeah,
missed it?
you said she
Okay.
hit you up
She hit me up last year,
last year. Yeah.
because she wanted to speak and apologize. After these chicks go to therapy and all this stuff, they want to be on a apology tour. And you know, I let her I let her
Mhm.
apologize. But she wanted to be friends again, and I was like, I don't want that. I'm done with you. Well, really how it panned out, she asked did I cheat on her. I didn't respond. I'm like, you don't get to ask me that. So she assumed I did. So that was, oh well. But basically, she basically said that I was based on a retirement plan. She when we together, she felt like she can relax. She was tired. Uh, and she didn't, she had a nervous system, so she didn't want to work as hard anymore. And see, look, let me see. Look, I was just looking for foster security in a happy home where it was already broken because I had trauma issues that I had not resolved. Look, that was she looking for security, looking for help, which these women are blatantly telling us nowadays they need help. They just not saying it blatantly. That's why they ask for six-figure incomes and to take care of they bastards because they ain't got nobody to help them. They made bad decisions. And, I can't knock them for that because that's what women really want. They just don't want to say it forthcoming. And, when she told me this, I was just like, well, you know what? That makes sense because she was kind of like acting a little weird and a little erratic, having problems with people at work. I'm just like, listen, you're not about to. I told her like, you're not about to sit around here and look pretty. I don't want no housewife. That ain't what I'm looking for. So you're gonna have to do something. You know what I'm saying? Because you already started this off on the wrong foot. I didn't want to move in with her in the first place. She just kept bugging me and pushing me to do it, and my punk ass just gave in. But I didn't want to do it, and all that shit happened is the reason why. I should have went with my first damn mind and been like, you know what? I don't want to date you. I should just went and moved where I was supposed to move. It was gonna be a nice house, and I ended up doing that. I was just saying it's weird, man. When women just looking, they really want that security. They just don't really want to say it forth. They don't want to. They don't want to just say that because it'll make them feel vulnerable and like they really need a nigga because they really don't want to feel like they need a man nowadays. I'm not saying all women, but mostly all of them. And they tell you when they ask for the requirements, they want to be taken care of. They tired. They, the women of the past, the ancestral women, sold them out about just women lives and women's rights and all this stuff. And they don't want to do this. They don't want to do this feminist shit no more. They want to go back to being feminine in certain respects. That's why I say it's oxymoronic when they be talking crazy, like I don't need a man, but you want a man to take care of you. You know that. You don't want to work this hard. So that's why I'm just trying to find a medium ground. And she just admitted it. I just thought that was a breath of fresh air. I'm just like, well, I'm glad you said that. I'm glad you told the truth that you just needed security and you was tired and you didn't want to work hard no more. I respect that. I can't respect when you ask for six-figure salaries and not telling us what you really want.
I think it's, in my opinion, um, most of the world has a religious foundation.
Yeah.
And religion tells a woman that a man is supposed to take care of her. That's what religion does. Now,
Mm-hmm.
do most of the people who encounter these situations religious? Probably not, but they kind of carry some of that thought with them. And so it kind of gets you in trouble. Do most of the people have to work to survive? Yup. Most of the maybe you find so, but there's a lot of men who have that mindset as well that they don't want the woman to work and they want to just take care of them. I think just the mix and match just don't get caught up with each other
Right.
from that degree. Because like when I first met my guy, he was like, you don't got to do this. You can start working anytime. I can
Mm-hmm.
take care of you. But for me, I'm like, yeah, that's cool and dandy. But I didn't want to start dating until I knew I could hold my own. Because I seen too many situations where one
Mm-hmm.
or the other person gets stuck, not for the pettiness of a male or female taking advantage of them, but just the way society, the way the world puts you in situations. You know, I always go back to what I know that in '07 when they started stop lossing and furloughing and sequestration and hit the government, everybody was, either you was losing a job or you was leave without pay. One or the other. I thought that was the weirdest situation ever. That gave me a reality check. I'm like, man, I need to be able to have something, some kind of revenue stream, whether it's from working a 9 to 5 or being able to make money, on the side or something. But you can't not have nothing at all. Something. Either you creative, you know, you're gonna sell some candy, some cold cups, or something, you know. Baby said daycare, you better you have to
Bro,
have
you
it
take some cold cuts?
cold cups.
Oh,
The
I
frozen
thought you
cups. You
said
know what I'm
Cold
talking about?
Cuts too, like lunch meat.
With that too, shoot.
yeah.
You better have something. I always looked at it as even though they are available to do so, you definitely should still have your part, and you can never get too tired of doing, because this whole thing is a group. To me, is a group effort. I've never seen a household as not being a group effort. It doesn't matter if one person takes their full responsibility or not. It still have some play. So this is what I said. In my age right now, 47. In my age right now, if I got married, I probably it depends on the size of my house. I can handle it on my own, but if I got married, I probably and we were an active couple, then I hire somebody to come in and clean at least once a month. Like because I wouldn't have time. If we were active, I wouldn't have time to always do it right now. And then if not, if I wouldn't do that, it would at least be twice a year for a deep cleaning, and then I could maintain it after that. But once a month would probably be ideal for an active. And I think what happens, so here's what I think happens. I think that I know that if your girl is at home and let's say she's taking care of household, you bring it home and she's cooking and she's cleaning or whatever, it's an exhaustive and it could be a lot of work sometimes, right? So what can happen though, this is where the female has to get smart. And this is why I had to pay attention to, because at first I thought they married and I thought they were I said, man, they be tight on their game. Them houses be clean, boy, all the time. But then I found out all you mother effers had a cleaner. Hold the hell up. Wait a minute. Now it doesn't mean that they're not clean people. It just means that they didn't have time to do it always by themselves and to have kids. Because I was like, man, they are mega super women. They cooking, they cleaning, they got the kids at the practices, whatever, they got it going on. Shit, till I found out. And my friend was like, oh no, my cleaner coming over today. I said, what cleaner? She's like, oh yeah, I get my house cleaned at least once a month. I was like, what? Oh, hell no. Wait a minute, then I had nobody twice a month, so you got to kind of get smart on your game to kind of give yourself some relief, if you got it to give and you could schedule it out, put it on the schedule, because I think we have too much going on in this modern day for you to do it all unless that's all you do. Now, if you get involved with something else or you got kids, man, good luck. Cause I'm gonna tell y'all, I'm dealing with teens, and I'll be like, so every Friday we would clean on Friday. So when I get off, that's the first thing we do, and we try to make it last the whole week and just sustain everything else. You should just be washing dishes, maybe sweeping the floor, da 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 da. Everything gets clean on Friday, and then you run it like that. And then on the weekends, all the laundry get done. And you keep it pushing. But we do that together. I ain't gonna tell y'all no fibs. I don't do it all by myself. Oh, hell no. And I gotta work too. Nah, nope. I'd be like group participation. Who got the bathrooms? Who got the kitchen? And we split it all up. And we get done in 30 minutes.
I don't see what's wrong with that.
There better not be nothing wrong with that, because and then sometimes don't let me be PMS and shit. Then I might have to hire someone. But then I said if I had to get married and I had that extra responsibility, because then I had to pay him some attention too. Oh, I'm gonna have to get somebody to come in once a month. I'm gonna have to make that expense. I might have to start doing my feet and nails myself. I have to I have to do something. Not to mention, you got to keep the car clean. You got to go places. I just think household responsibilities is big. But guess what? I think that we overlook it and we don't try to manage it. It's all about what you can manage and how you can manage it. And I think that some people get caught up with they're not. You have to schedule things out. It's kind of like, I always look at things like a job, right? If you go to work, well, I know in the military we used to have a schedule, right? This person clean on Monday, this person clean on Tuesday, this person clean on you know what I'm saying? You schedule it out, or you come up with days you do it. On Monday, Wednesdays, and Friday, or Monday, Wednesday, and Fridays you do this. On Tuesday and Thursdays you do that. Don't try to do it all at one time every day. That's not gonna work. That's too much. You can't do everything every day. I had to learn that. I learned it the hard way. Got overwhelmed. Had to go take a mental break. Like, what the hell is going on? Then I realized, okay, you can't do top to bottom every day. What you got to do is say, okay, Mondays and Wednesdays, I'm gonna do this. Tuesday and Thursdays, I'm gonna do this. Fridays, I'm gonna tidy up this, and Saturday and Sunday, don't you ask me to do nothing.
Mm-hmm.
I'll start it all over again on Monday, but I'm not doing it. And then you got to make sure that everybody else can sustain what you're doing. You can't, if you know that I'm only mopping on Monday, Wednesdays, and Fridays, don't you bring your ass up in here on Tuesday and track up no mud in this house. Those are the things subliminally you got to make sure people understand. Like, I'm only gonna take the trash out on Fridays. Why is you piling up trash all through the week? Like, take it with you. Go throw it somewhere. Something. This is not the day to do that. Don't. And I say sometimes I'm gonna tell y'all where I get that from. So there was we did in the military. We did a singles retreat, and there was a book. It was Men Are Like Spaghettis and Women Are Like Waffles. Or is it Women Like Waffles and Men Are Like Spaghettis? Let me look it up.
Crawfish.
Huh? No,
What?
spaghetti. It was, hold on, let me look it up real quick. I think it's Men Are Like.
Yeah, I'm over here making up stuff, Brandon.
No, not.
Like.
No, not. Yeah, Men Are Like Waffles and Women Are Like Spaghettis. Look, I'm about to show y'all.
No.
Brandon, you might could get the book. Hold on. Brandon, you might could get the book.
Let's see this.
You see it?
No, it's on you.
Hold on.
Yeah, that's wild.
It's not. Watch when I tell you something. Watch. It's Men Are Like Waffles and Women Are Like Spaghettis.
Spaghettis.
That's the book.
Oh my God.
Let's see. And I think I have the audio book.
Lord.
Hold on.
You want to be spaghettis, huh?
I think I have the audio book already. Let me see. Let me see if I can log in. Don't look at my stuff. Hold on. But anyways, now that y'all know what to tell the truth. Anyways, so what it said was that oh man, I forgot why I was gonna say that. Well, one of the things it talks about is like when if you are like let's say you go to the grocery store to get something, you're direct. You go straight to the grocery. Let's say you go to the grocery store to get some plums. You go to the grocery store, you get the plum and you keep it pushing. The lady go to the grocery store to get some plums. She gotta look at it. She gotta look at the color. She gotta touch it. She gotta feel it. It's gotta be a certain weight. It's an analyzation of things. So I've learned that you got to discuss things, and you got to men and women do not think alike. We have different perspectives on things. It doesn't make one right or wrong, but what you have to do is when you realize it and you understand it, like what kind of laundry detergent you like, Chris?
There's some called EOS.
Hills? Okay.
EOS.
And
EOS.
Brandon, what kind of laundry detergent you like?
Like, keep it simple, all.
You like all?
Yeah.
And I like Gain. Now, let's say.
Oh, God. You got all that extra stuff in it.
Yeah, we know you're going to say that.
And you get that scent.
So, if I see you to the store hey, babe, can you bring me some laundry detergent back? And you bring me some damn all or some whatever Chris just said, I'm gonna be mad as hell because I can't stand. I have to have like that's my thing. I get but check it out, right? Before you know that I have a preference on laundry detergent because I didn't tell you, right? You go and you get the laundry. You like, I brought back laundry detergent. What you mean we ain't got no laundry detergent? There's some laundry detergent in the thing. I just bought some. And I'm like, I don't like that. But I don't tell you that. I'm just mad
Yeah.
because instead of me just saying, hey, I prefer to do my laundry with Gain. And it's cool if you prefer to do your laundry with all. Just make sure you bring some Gain too. I wash your clothes with all, and I do mine with Gain. But
That
if
don't
I
make
never
no sense.
it, well, it don't have to make sense to you. It's a preference.
Hold on. Now, so you're gonna be spending money on two different washing detergents? Now make that. Come on now. Come on, Mo.
No,
As
no,
penny
it's
pinching as
okay.
you are, you
Well,
want to
you
buy
don't
two different detergents.
no, but you don't have to buy two different detergents. I'm just pleasing you and myself. I don't have to buy two. I can buy Gain. But you can't buy me no Tide and no all. I mean, no all and no whatever you said, Chris.
Yo,
No, I don't like that. I like my clothes washed in Gain.
how you know you
And
don't like it if you ain't tried it?
I don't like it. I don't want what I want. Now you see how we having a disagreement right now? You see, Brandon. You
Look,
see how easy that went? Because we argued about some damn laundry detergent, right? When all
yeah,
you have to now I agree that I can buy both. But no, not my man. He won't. No, we getting one and we getting the one I like. But why we can't get what I like too? You see what I'm saying? Those be simple things that causes friction in relationships that it could really easily be solved. Some laundry detergent, really?
Yeah. Mo making it about laundry detergent. So anal about goddamn game.
I want some game. You better have. Listen, when I come through that house, that game better be smelling. That darn lavender better be smelling coming through this door. I promise you. Listen, now, I'll give you another one. Uh, what do you when you do your when you mop your floors? What do you use?
I
Uh,
saw.
yep.
Oh, I
So
can't stand pine sol.
fabuloso.
Okay, I rock with the Fabuloso.
I mean,
You
I,
don't,
can't
don't tell me
stand.
you got like
Hold
some
on. You
fancy
can't stand.
ass scented fucking just my. You supposed to get your floors clean, goddamn it.
not bad, not
Pine
Brandon Manning.
Sol is OG,
Not
man.
Brandon
What are you
Manning.
talking about?
One bad about the detergent, the other one bad about the floor cleaner. Listen, but you see how easy that those are like, it's like, look, I already know. So when we read the book, men are like waffles, women like spaghettis, I learned that okay, don't be deceived. There's some things that men and women don't talk about that can set their relationship off, but they don't even know it because they haven't really explored each other in that manner to even think about that. So when I learned it, right, you can't set me off because I already know what's up. So what I try to do is I conform, but I'm gonna get me in there too. Now that's me being petty, but you'd have to deal with it. You would have to deal with it because I always make sure you straight. But I'm gonna add me in too. So that's the little caveat. So that's the only little kind of nuisance that I have with a guy. Like I'll make sure he's squared away, but I'm gonna get what I want. That's why
Hmm.
when y'all be fussing about having a different money, I was like, oh hell no, I gotta have my own money. I'm sorry. Cause I already know you gonna make me mad. You gonna come in there with a damn pine saw and I'm gonna tuck that shit in the back of the car in the closet and I'm gonna
Uh,
put my
That's crazy.
that's petty as hell. You gonna
That's
pour something out
crazy.
every time you mop.
Mo wild for this boy.
no,
Gonna
but
waste
it's
my money.
but look, okay, if you think I'm wild, talk to some people who live together. And I promise you they have differences in cleanser, laundry detergent, dish detergent. Oh, let's not talk about dish detergent. What kind of dish detergent y'all buy?
All kinds. Dawn.
Okay, okay, we can get down. I like Dawn.
I mean, come on, man. Really? We gotta go to this low level.
Yeah, that's not low.
Yes,
That's
it is,
quality. That's
man.
quality of life.
No, how the hell
Okay,
is that
what would
quality
be
of life?
quality of life is if how you clean up, how you cook. Those things are
No,
more
what you cook with, what you cooking,
yeah.
and what you cook with is a factor.
But goddamn detergent and dishwashing liquid, come on, man.
Yes,
If
because
I go and
everything gonna
get
come.
Irish Springs, you gonna have a problem with Irish Springs
Hell
if I'm
yes.
done.
You better not bring no damn Irish Springs in
What
my
you
room.
say?
You go and take your bath in another room.
You
No.
don't like Irish Springs?
No. It
Look
gives
at Mo, man. Oh my
no
god. I
Irish
mean, I don't
Springs,
use Irish
no
Springs. That was just an
Ivory.
example.
No. Dove,
Let me
Caress,
guess.
yes. Oliver.
You only
Listen,
you only use Crest toothpaste. Let me guess. Or
no,
Colgate.
no, I use
Sensodyne.
Advance.
Huh?
I like System and I use Advance. No,
I
I do
mean,
not use Colgate. I do not use none, what's it called? All of the stuff.
Crest.
Crest.
I use Tom's. Tom's organic natural.
I like
So
that.
Yeah, I do too.
I like that.
yeah, she gonna have a problem with Yardley soap next.
Yes, Ramsey. I like Mr. Clean. Now we can be friends. Chris and Brandon fired.
Let me guess.
Listen,
You only like your hangers from Walmart, not nowhere else.
I only like plastic hangers, and I like the
What?
same. Yes, you
So if
like
I bring if he brought metal hangers, you would
it's
throw
gonna
them
be
out.
all his clothes. Though I'm just put all his clothes on.
So what do you
Mm.
do when you get when you get your clothes back from the cleaners?
I take them off.
That's a waste of hanger. What you saying?
No, I just put a man stuff on it. He be all right.
Oh, crazy, y'all.
No,
No.
it's just preference. It's just preference. It's just preference. And like I said, see how, but you see how easy a relationship could go south because of preferences. Men
Mm-hmm.
are like waffles,
Yeah.
women are like spaghettis. We like what we like, but each individual like what they like. The difference is like I'm willing to compromise with you and get you what you like, but I'm gonna get me too. But you don't want me to get me. You want me to just get what you like. The hell?
First
You
of
Because
see
if
all,
I'm
Chris
paying the
laughing? You
bill,
anybody
see
who
Chris laughing?
anybody who picking spaghetti over waffles should be tested mentally.
it should be beaten.
Oh god. I like African soups. But listen, but you see how easy you don't even think about that stuff. Okay, I'm gonna give you another one. What type of scents do you like? Whether it's air fresheners or plug-ins or whatever. Do you like flowery scents? Do you like oily scents? Do you uh like pine cone type scents?
No,
Do
no
you like
pine cone.
clean
Long as
linen
it
type?
smell good.
Clean linen.
That's me. Okay, Brandon. We finally damn agree on something.
I hate the flowery smell shit. That
Me
shit's too
too.
damn potent.
I
Yeah,
hate it.
if it's too
Too
if it's
sweet.
too yeah, I don't like it. Like I can do cinnamon or spice or something like that mix, but if it's just too like feminine, I'm like, nah, I don't like the eucalyptus smell,
Hell no.
with scents and stuff like that. That should annoy me. It irritates me. But I'm a very flexible person when it comes to certain things. When it comes to food, I don't want no bullshit ass meat or produce. It's got to be natural or organic. Uh, Even the dry foods like peanut butter. Don't bring no goddamn uh
Yeah.
Peter
Don't bring the
Pan peanut
generic
butter in
brand.
here.
Yeah, don't bring no generic brand. If you buy me some noodles, it ain't real noodles, I'm gonna be mad. You buy me some great value Walmart brand peanut butter, I'm gonna be mad. If you buy me
Damn.
Yeah,
some generic bread and you don't
yeah.
bring me no Sara Lee or no Evangelist down, you better take that shit back.
Oh
I'm not.
my God, C7.
I'm not eating it. I'm not eating it. Don't do it. I'm not gonna eat it. But listen, I'm telling y'all, a lot of times people have problems is because of this kind of stuff, but they don't say nothing. And because they don't say nothing, they wait. They wait, they wait, they wait, they build it up. And then when they get in an argument about something, all that comes out. And then y'all guys be looking like, where that come from? Why didn't you just tell me?
Fortunately, I haven't ever experienced that. All the girls I
Really?
dated, they kind of ate like some of the same or similar stuff
They ain't tell
when
you.
it comes to that.
They
Huh?
ain't
Shit,
tell
I
you.
have.
They
No,
ain't tell
because I
you.
found it in their refrigerator, so I know.
Oh,
So
okay. So you were
thankfully,
smart.
yeah,
Shit.
thankfully, I haven't ran into that issue yet.
I was dating chicks who only wore some type of sock. I think it was just Nike socks. That's it. That's all she wore. God help me if I bought like Adidas or like some champs. She'll freak the fuck out.
Hold
I
on.
was like,
Oh, she
really?
snapping.
Hold on. I'll be right
Yeah.
back. Bring the
Girl,
tissue.
Nike paying you to do that?
Right. I was like, girl, you better put on this that damn
Dude, I got Nike
Dollar
socks
General
too.
stock.
Yeah,
Huh?
I got Nike socks too, but I ain't wearing them every day. Shit.
Right.
On these Walmart socks real quick, you tripping.
Fast in a hurry.
Shoot.
But I only wear Nike socks. I was like, all right, well, you gonna be paying for your own socks now. I want to see your crusty ass feet of mine.
Facts.
I'll
Don't
get
put
them.
your damn feet on my shit. I'm over here making things hard, talking about dishwashing liquid and detergent and soap. Talking about we got to buy you what you like and then buy ourselves what we like. But
Ain't no
we
damn
ain't
sense.
coming. Yeah, we ain't coming together, and buying something that can both help us. You like game. I like all. I like EOS. You like game. You don't want to let the game go because that's just what you like. You ain't
That's right.
single no more, Mo.
Shit. Um, Listen, it's not too hard to purchase the same. It's not too hard to purchase what you like and what they like. It's not hard. It's not hard.
It's not. Because I'm gonna ask you why you so stuck on game. What's so good about game? You be
Oh,
like,
I
I just
love it.
like
It
it.
smells so good. It
Yeah,
smells
see.
so good.
Yeah, see, I knew you was gonna say that. So
Look, well, look. So I know that if I get my boo some sneakers, it better be them damn Jordan 4s, Jordan 11s, or whatever. He might take something else. He ain't gonna wear it maybe once or twice. If I
yeah.
get something, he gotta have the Nike sweats. It has to be tapered at the ankle. It has to be like I already know all of this. Like I'm not gonna go and get him something he don't like. Like I tried once before. I was like, I'm about to buy this. He gonna wear it. I don't care. He like, that's cute, but I ain't wearing that. You
Let me
mean?
guess, he put that motherfucker back in the closet, didn't he?
Hey, he's
Like you
Yeah.
saying,
did my pine saw.
yeah.
Yeah.
I
Yeah.
say, what? Do you know how much I spent on this? He was like, well, if you would have asked, you would have known that I don't wear that. And I say, damn, he high maintenance. So, okay, here's what we gonna do. So I just make sure he's squared away. And he already knows. Don't do it. Don't you go buy nothing that I don't like. I'm not gonna wear it. I made a mistake one time, but I have to fake. See, y'all guys, y'all sensitive, so I had to fake it like I like it. He bought me something. I had to fake it like I like it, because if I didn't
What
wear it,
the?
he was like, because y'all men are sensitive, but yet y'all buy something for us and we don't wear it, or we say we don't like it. Oh, y'all go off on a tangent. If such and such would have bought it, you would have wore it. You
Y'all
be
the
like,
same
what the
way.
hell?
Well, I mean, you
Ain't
know what?
no.
No, y'all blunt. Y'all blunt straight to the point. What is that? I ain't putting that shit on my skin. What is that?
Right, right.
Nah, hell
Yes.
nah.
Yeah, that's
Look,
whack.
if I love Glad. If I but it's just certain thing. I'm telling you, and you know, the older you get, the worse you get, right? So I'm real
Hmm.
bad. I'm real bad on brand, like brands. Depends on what you're doing. Like I have to have certain stuff. Some stuff, it's not too many generic things I like. Like, I'll go to the dollar. I'll be like, you better go to the Dollar Tree. You better still get that brand. Yeah, don't bring me no plug it in. Oh, what you better be? Okay.
Are
If
you
you
are,
want
you-
to.
are you guys the same way with your meats?
Well, I'm so
Mm-hmm.
glad. So meat wise, I never really pay attention to meats, to be honest with you. Is the dish, is what you're gonna do with it, is my thing. You know, I'm from
Okay.
Louisiana, so y'all already know how we get down. If that food ain't got no kick, mm, I'm telling you right now, it's gonna be hard for me to eat it. If it ain't like a close to Louisiana dish, it's gonna be hard for me to eat it. I'm just scarred that way. I'm trying to get
Mm-hmm.
out of it though. I'm trying to get out of it. And I don't like and for a long time, like the reason I don't know a lot of restaurants around here, because it ain't my style. It's hard for me to go out to eat. That's why I don't spend
Yeah,
my money on a lot of food, because I
right.
don't like the food. If I'm close to Louisiana somewhere near or whatnot, yeah, I spend all my money on food, because that's just me. But here, shit, they be like, "Hey Mo, take me to a nice restaurant." I'd be like, "Shit, I don't know nothing." You probably know more than I know. I don't know nothing about Colombia or whatnot, because I don't like the food like that.
It
I'll
ain't
go to
none
a
that license it?
craps. No, but I'll go to um juicy crabs before I go to some fancy restaurant. You know how that thing was going around? Like, where would you take a lady on a date or
Yeah.
whatnot? I would go to juicy crabs before you go taking me to some high end restaurant. I'm forced to go to high end restaurants. I'm forced to go.
That's wild.
I can't stand it. I be wanting to
Yeah.
eat. Don't take me to no restaurant not to eat. If I'm gonna eat, take me somewhere where I
Cap,
want to eat.
cap. I
Yeah.
don't believe that. I don't. I
Oh,
don't believe that.
okay. Shit. You you would never see, if you went through my Facebook, you won't see no post. You'll see maybe two, I think, post of a high end restaurant. Rue Chris and
Mm-hmm.
one of the chop no, one more. One of the chop houses, and one of them restaurants where they cut the meat down in front of you. Different meats there.
Hibachi's.
Yeah, no,
Yeah.
this one's called
Japanese steakhouse.
Cal. It's like a something, I don't know. Rizzo's, something like that. But anyways, that's, you may find about two or three. I promise you, all my years of living, you won't see me at any of those restaurants. And people always ask, why you don't go out to eat? I be like, I don't like the food. I don't like the food. I feel like if I'm gonna spend my money, I this year, was it this year? A tip in the last year. Well, one of my friends, they always go to high end restaurants, and they be like, let's go to Ruth Chris, or let's go to this. And I'd be like, damn, why I gotta go with them? And I have to fake like I like the stuff. And then I have to go with them, whatever. But when they ask me, it don't never nothing like that. They be like, why we gotta eat that? Why we can't go to? I be like, man, let me have my way just one time. I just hate it. I'm not. Mm-mm. Now I don't like hamburgers and hot dogs. You know what I'm saying? All the time. I'm just saying I just don't. It's just not my favorite thing to do. I don't know. It's not my favorite thing to do. So now, my favorite place to go today. Oh, take me to a sport. Let's go to the go see. Let's go see a baseball game, a football game, basketball game.
Uh-huh.
You know, I'll even go track and field. Hell, that's a good time.
Yeah, it is. Watching competitive sports.
Yeah. Then to go sit there and go talk about nothing and eat.
Yeah.
That's boring to me. But I'm an athlete, so I would say something like that.
Yeah.
You know, I ain't girly girly. I could get dressed in, look girly girly, but I'm not. That ain't my thing. Look, when we was on the cruise, like Sherry and dining, sharing the dining facility every night. She want to go. Let's go to dinner. Let's go to dinner. Not me. I'm sitting on the deck
Oh God.
in my little stuff. I'm just chilling. I ain't trying to do none of that. I don't want to do that or whatever. She's like, "Come on, Mo, go put your clothes on. Let's go eat dinner." I'm like, "Didn't
Hmm.
that mean I gotta dress up and do all that?" Oh, I don't want to do that. So I give her like 2 nights, and that's a wrap.
That's tough.
That's
Yeah,
funny. You said you give her 2 nights.
yeah, I give her 2 nights. That's it. Because if we there for 5 or 6 nights, she only gonna get two. I'm gonna get ghost on her the rest of them.
Mhm.
Cause she want to dress up every day. I don't want to do that.
Yeah.
Not on vacation. Especially we in the heat. Please, I want to wear just my wrap and my little swimsuit and sit my little happy butt down. I ain't even trying to do that.
What
Yeah,
the?
yeah. So y'all should have learned something from me tonight. Don't be tripping on your girl.
Oh boy.
Hire you a maid, Chris.
Yeah.
Definitely you, Chris. You old school.
Hire
Brandon
me a
seems like
maid.
Brandon might compromise a little bit, but Chris, you old school. You gonna have to hire you a maid.
I'm gonna do more than hire me a maid. I'm gonna go and get me somebody from the brothel too. I'm gonna hire them.
You
They
said
gonna
You
be.
gonna you gonna have to take care of them. What's gonna be the difference?
I ain't gonna take care of them. They gonna take care of me and get paid. And I just call them when I need them.
Oh my god,
I'm just playing.
I can't.
Man, listen.
I can't.
Either, either way you gonna pay, man. Either way you gonna pay.
That's what I'm saying. So paying should be no factor. Fair
It
shouldn't
ain't
be.
about paying. It ain't about paying.
What
Now
kind of
the
women?
price, the
Tell me,
price,
women you
huh?
like. What kind of woman you like? Tell me.
I ain't gonna lie. I like a smart woman. That's what I like. With decorum. No
You need to
winning.
you need
What?
to run into my cousin. Maybe I might hit it off.
How old
I
your cousin is?
I think y'all around the same age.
Yeah, I do need to run into her then.
She's a she's a what is she? She's a realtor and she's a hold on, let me see. I think I showed it to you before. She in Houston. She play golf.
Oh,
Yeah,
oh,
she be with them folks. Oh, how do I log on to Facebook? Hold on.
you like to hang out with them white folk?
That's who pay her check. She ain't stupid.
Ain't no wrong with that.
They write the check. Gotta go where their money at.
I ain't mad at that. That's the right thing to do.
She on the black girl golf team.
That's dope.
She done got pretty good at that golf thing. I think that help us stay relaxed. You
Yeah,
know.
but stay relaxed. What you mean?
Yeah, you know how sometimes you just need an outlet and just find you
Yeah,
something to do.
yeah.
Like I'm not into golf because I just can't do it. It's just too bored for me.
Golf had you frustrated.
Yeah, no, we go fit my thing.
Yeah, I know. It ain't. I played once. It was cool.
Yeah, golf.
I'm old school. Calling Brandon, he more compromised. You don't
Yeah,
let her talk about you like that, Brandon.
Brandon be chilling.
What's that?
Talking
Yeah,
about you.
I
You
say Chris
new
old
school,
school.
so you compromise. You
Oh, bro, man, first of all, I be compromised if I'm relaxed.
Chris mean.
I'm not mean. What
Chris be
the hell?
Chris mean, Brandon.
I'm not mean at all. I'm direct, man. I'm direct and straightforward. I'm coming over here with no bull crap. Like, I just ain't gonna tolerate certain stuff, man. And we adults, I shouldn't have to tell you what to do.
Hmm.
I'm just like, if I find myself telling you what to do, I'm gonna start treating you like my kid. Cause you
Mm-mm.
acting like it.
Oh Lord.
See? Yeah, see? Look at her. Oh Lord. It's oh Lord now.
I don't know about I don't know about acting like no kid. I don't be an adult. Okay, hold on. Let me share my screen. Let me show you Stacy.
Last girlfriend, or last girl I was talking to, I'm still kind of talking to, Puerto Rican, right? She older woman. She
Just
be
like them
just
grown women.
she just be going on and on about this and that. I'm like, why are you trying to align yourself with stuff you don't agree with? You know, I'm like,
Oh, this what she is. She's a pre-construction manager.
pre-construction manager.
Yeah, she
Hold on.
HVAC. Hmm?
What happened to your screen?
Oh, you can't
Oh,
see it?
you took it off?
Hold on.
That's on there.
Oh, hold on. Let me go back. What about now?
Oh, I don't see nothing.
Brandon,
I
can you
see.
see?
Yeah, I can see it. It
Hold
says,
on.
"Don't be afraid to take up space in fields."
What the heck? One more screen can't see it. Oh, there it go. Wait, but when I click on it,
Hold on,
it
Mo, go
only
down.
shows.
Go back down.
I knew you want to see it,
Oh,
but
wait, go scroll. Yeah, scroll back up.
I knew you want to. You
Yeah,
want
We
to.
can't
wait.
even see it. We can't even see your friends list though, Mo.
You don't need to see no friends list. You don't see my cousin Stacy?
Yeah, I want to see her page. I want to go to it.
It's right there.
Stacy Sam. Let me see, man. I
Hey,
don't
tell.
know.
When's the last time you talked to her?
I talk to her all the time. She's my little cousin. She's my first cousin.
Tell her
She
that
in
she might have 2 new followers.
she in
Okay.
Houston with Chris.
Yeah, I see it. Okay, I see her page. Let me see.
Yeah.
Oh, she ain't no Gemini. We good.
She's single. She ain't got a man. Oh no, she's December 4th. She a
Oh,
relative.
she a Sagittarius.
Sweetheart.
How old is she? She our age?
Stacy is how old is Stacy? I think she's 37.
You got to bring on the show.
Stacy, you want me to bring her on the show?
Yeah, we
Yeah,
can talk
tell her
about
to come
construction.
on. Yeah,
I want to
tell her
talk.
to come on.
She's in the Black Girls Club, Black Girls Golf. Let's see her hit action.
And rounding off the 9:50 starting time, playing out of Opelousas, Louisiana, making her Blue Jack National debut. Please welcome Miss Stacy Sam.
She made it to nationals.
I have met some Louisiana women before.
she's a hooper.
She can't hoop.
Hey, watch yourself.
She can't hoop. Mo can't hoop.
Oh, that's some nice pictures of her. Whoever took those. Yep, she has an HVAC.
Certification.
Yeah, she used to work in HVAC sales in Florida, in Orlando, and then the guy, which was a fiance, decided he wanted to date somebody else, so they split
What?
up. They split up, and she was, and then she got the job in Houston, HVAC sales, and then she got the realtor license, and then she wanted to go into construction, and that's why you seen that construction on here. Probably she making them dollars now. She don't have no kids. What is it? Manager.
Yeah, you got to plug her in.
Bam.
Yeah.
Till I sent you. Yeah. She can hold on. She can hold on.
Yeah.
She can hold on. But she's not as feisty as I am.
She a Sagittarius. She definitely spicy.
No, I say feisty.
Feisty, same thing.
She not as feisty as I am.
Y'all both gonna be the same watch. She gonna be talking about game. I'm like, man, you got that shit from Mo?
You hear that, Brandon? You hear that?
Like, you got that shit from Mo? You coming over here with the game?
Now she might like Tide. She might like Tide. I don't know.
Oh, you funny for that, boy.
What? It's true. Look, when I go to the store, I shop for the same stuff, and I don't like to really veer off what I like. Now, I didn't say you couldn't buy it. I just say don't buy it for me.
Right.
All right. What if your significant other buys it and you like it?
Then I might adjust if I run out, I might have to use a little bit. But it's not gonna be consistent.
What if it is?
It's gonna be consistent.
No, it ain't gonna be no. We ain't buying that. We ain't using that.
Oh man,
come on, tripod salt, one at a time.
That's why I make sure I buy a gallon of it. I make sure we don't run out.
Look at that stuff, man. Look at that.
We're not washing our clothes in that.
Oh yes, you is.
Oh no, I'm not. I'm not doing that. And let me see. So I asked you about the floor cleanser. Let me see. Let me see what else I can get y'all. Wait a minute, Brandon said something about the cleaners. You sent all your stuff to the cleaners, Brandon? Your shirts?
You said what now?
You send all your stuff to the cleaners?
Hell no, I don't sell all my stuff to cleaners. Just like certain shirts and pants. That's about it. My dress stuff.
Yeah.
My rest of my shit, I don't give a damn. I thought it was in the washer.
Throw it all together, huh?
No, not all together. Okay, I gotta separate them. Whites with whites, colors with colors, socks with socks, drawers with drawers.
Chris throw all his together.
No, I don't do that. Mostly, look at you talking bullshit.
She starting stuff, Chris. She starting stuff.
Yeah, no.
Clothes are the same.
Any food know you supposed to separate your clothes, Mo.
I know a whole bunch of foods that don't.
What? You put all your clothes together?
If it's workout clothes, I throw them together. Workout clothes. but regular clothes, no.
Oh no, you can't do that either.
Workout clothes? Oh, I toss that all together. Just leggings and t-shirts. T-shirts come a dime a dozen.
Yeah.
If they mess up, hell, just go to another outreach event. You get you about a couple more. T-shirts. You get t-shirts. Man, listen. Okay, here's another one.
I sent her a friend request. Let her know who I am.
Which hotel do you like to stay in?
Anywhere?
Anywhere.
Okay. The Marriott.
Okay.
I mean,
Yeah, go ahead, Brandon. Tell
I'm gonna say Marriott too. I mean, like Marriott or the Holiday Inn.
We
I said,
them.
Holiday Inn and Suites. Yeah.
yeah, the suites. Yeah, no, I'm not going down to that bust down
Oh,
Holiday Inn with the 2-star rating.
Right.
What about Sunny 8? Sunny 8
Who?
Hotel.
What's a Sunny 8?
Oh man, you know what
Oh, the
Sunny?
Sunny 8.
Yeah,
Oh man,
yeah,
probably
Mo.
not, man. Probably not. We got that.
What's a
Double.
Sunny 8?
It's one of them hotels that's outside.
Oh no.
That, with that pool, they got that ring around it.
Mm. You silly. A pool with a ring around it.
Hold on, man. I went to Sunny 8 when I was a kid, man.
Yeah, as a kid.
I thought it
Yeah.
was called Super 8.
Oh yeah. What? Yeah, that's it. Super 8. Super 8. Yeah, Mo. You know what it is because you like it.
No.
Yeah.
Them places got bedrooms. Ain't nobody going over there. That's where the peoples be. That's where the prostitutes be.
Yeah, we like them.
No, we don't like them. No. And now I done got a little bougie now. I don't want to go nowhere where it don't valet park because I don't be wanting to.
Look at that. Look at this
Mm-hmm.
shit. Look at this shit.
You got a little money acting funny.
Hey, my man. Now this is where my man gets off the bus. He be like, "Shit, you must be paying for that valet because I could have just parked the car for us." I'd be like, "Okay, you could do that, but if I'm by myself, good luck to my bumper, baby. I'm going valet. I didn't even start valet parking at the airport. I valet parked on my cruise.
Man.
Let's see.
Yeah, double tree.
Well, it depends.
No.
Yeah, it
What it
depends
depend on? What it depend on?
because I caught myself going to the DoubleTree in Atlanta. I say, hell no. No.
I
It
don't
depends
remember. I know
where it's
Atlanta.
at. It depends on where you're at. Now, Drew, what is it? Drury? You know what I'm talking about? It's a Drury? A Drury?
Drury Inn, yeah.
That's not bad. Sheraton.
Yeah, stayed at the Sheraton before.
Yeah, those are and the Hilton, of course.
Yeah,
Now I ain't balling to be at the Ritz Carlton or none of that.
Oh, yeah, talking like it.
Not yet.
Lying, Chris. She lying. She been there before.
No, inside the lobby.
Oh my God.
Inside the lobby. I'm not there yet. I've never been at the Ritz Carlton or whatever.
Mo, when you went to Vegas, where'd you go?
Well, Sherry has timeshares.
Oh, okay.
Yep, Sherry has timeshare. So when we go, I only paid $300 for 7 nights.
Dang.
Yeah, we going at the end of the summer.
Yeah. Some paparazzi.
Yeah, but this year we probably gonna go in there, get our little jewelry and leave or whatever. Cause
And y'all go to LA too? Then y'all road trip?
yeah, we drove, when we go to Vegas, we rent a vehicle and we go to the commissary, we buy our food, we cook every day. Yeah, we don't eat. We may eat out once. We pick a night and we go and we eat out, but otherwise we cook shit. We have our sandwiches during the day. We cook. Sherry cooks breakfast every morning. That's her thing. And then for lunch we have our sandwiches and our fruit and our chips and drinks. And then for dinner, one of us cook. So every day one of us cook. We have watermelon and we have cereal and just little things, Lunchables, things like that. Yeah, let me tell you, as much money Sherry makes, Sherry cheap as all get out. She be like, nope, we're not spending that. We go buy some jewelry and make us some more money. So
Mm.
we go to the commissary and we shop. And everywhere we go, we try to stay close to the commissary. We try to stay close to a military base so we can get the privileges of, you know, getting there. And then we already have a rental. So we drove to Los Angeles like 2 hours. We drove our
Yeah.
little butt all the way down there. Yep. Just to go see
Mhm.
the Hollywood sign. Ain't that crazy?
Yeah. No, ain't nothing wrong with it. That's what people
Yeah.
do.
Yeah. We had us a little adventure. And then we came back. We were so tired. That didn't make no sense. We were very tired. We've been doing a lot of adventurous stuff though. We try to live a little bit. When y'all get to be our age, y'all be catching up.
Yeah, I'm at that age already.
How old are you, Brandon?
37.
Oh, you is not at our age. Sherry is 10 years older than me. She's 57. She gonna be 58. I'm gonna be 48. Yeah, you talking about some 37. Boy, stop.
About to
Shit
be
hits different.
38.
Shit
Nah.
hit different.
You hear
Yeah,
different?
shit different, Mo.
Yeah.
What's wrong with you?
Whatever. Wait, Brandon, Chris, how old are you? 37 too?
Yeah.
Y'all got a little time.
Got some more time to
Just
explore the spines.
just a little bit. You only got a little bit now.
Hold on, man. Hold on. Why are you trying to cap the ages like that, man?
No, I ain't kept no ages. I'm just trying to help y'all.
Help me with your cousin. How about that? Help me with her.
You might get whipped, and then I'm gonna have to deal with that.
Get
You
whipped.
might, yeah. Well, she ain't got no kids, and you ain't got no kids, so that might be a good thing.
Yeah, ain't nothing me get whipped yet. I'm doing the whipping.
If you, Brad, he talking about he doing the whipping. You ain't about to whip nothing.
She gonna be like, Chris, what you do to my cousin? Hey man, I'll just show her that southern hospitality.
Oh
Stupid.
my god! I'm gonna be like, Stacy, meet Chris. Chris, meet Stacy.
Yeah, yeah. Your cousin, she very good looking, man. Very
Yeah,
nice looking.
yeah. I don't think I have too many toe up cousins now. I think we
Yeah,
got a good little flock.
yeah. I don't want her talking about no games though.
No, she don't do that. Mm.
She talk about games, she getting kicked out.
No, you're not gonna see that. You ain't gonna see that. Stacy, she you see what she doing?
Yeah, she doing her thing.
Mm-hmm.
She got
Yeah,
it. Nice
yeah.
body, everything. Yeah, yeah, got
She
them
have
moves.
huh?
I was gonna say, quick question. In
What?
a relationship, is conversation one of the key factors majority of women listen to or like look for?
Yeah, you gotta talk a little bit.
No, I mean like that intellect side.
Oh no, we already no. Mm-mm.
They
No.
be saying that shit, bro. Like, I like
You
to
can't
be stimulated in conversation. Man, I'm not about to sit here and talk your ear off, man. I got shit to do.
stimulate it in conversation.
Man, we can
That's
talk. Like, no. Remember when I told y'all when I first met McKee on Clubhouse? Me and
Mm-hmm.
McKee talked all night for like 2 or 3 straight weeks. All night, bro. I didn't get no sleep.
because y'all
No.
had a common interest.
But we was just talking about so much other shit too. Like everything was just flowing all together. It was like that every day. It just never got old. You know what I'm saying? Like we just each started to have to give each other breaks in between because the time would just be going by so fast. I look up, I'm like, it's 6 in the morning. I'm like, bro, what the hell? We started talking at 11
Oh,
through the whole work shift. This crazy.
yeah, that's because y'all had a common interest.
Of course. We
It's
can
hard to have conversation when you don't have a common interest.
I mean, yeah, I get that.
Yeah, and when you don't, if you're not involved in anything, then what are you gonna talk about?
Yeah, good point
True.
too.
And if that person and if the person is not on current affairs and you're a current affair person, you're gonna be like they're gonna be stuck a lot of times. You know, you gotta have some type of common interest, or sometimes you may even just run out of conversation, and then you're like, you don't know what else to say.
Mm,
You gotta have a common. That's the only way that conversation is gonna go on and on and on. It's
right.
just not. And sometimes people are attracted to people and they have no common interest, and that's why they be like, "Man, she'll fine for a while, but then like she got annoying as hell." Yeah, because you had no common interest. She's just somebody who's look good to you, appealing looking. Same thing with the guy. You like, oh my god, he gets on my last nerves. You
Yeah.
know, and but you don't share it with each other. You try to still go and make it work. That's why a lot of times people, as they grow in their relationship, they can be in separate rooms because they never had no common interest in the first place.
Uh-huh.
Because I'm gonna tell you right now, I ain't gonna be in the house with my man and I can't slide it ass next to him. I'm sorry, not gonna happen.
Mm,
It's not gonna work. Ain't no way.
right.
I have one of my friends. They were dating and they were staying with a guy, and they in the bed every night, and he don't even touch him. Oh hell
Uh,
no! Where they do
Shit.
that at?
I don't know what that is. I know a girl
Mm.
told me that before. I'm like, she fine too, got body and everything. Said the dude didn't even want to sleep with her. I was like, what? I'm
Had to be
like, no,
something.
man, something's wrong here, bro. No.
Yeah, something wrong with him. Either he crossed over to the other side, or he had somebody else.
Or it might be her. It was something. He was. I don't know what it was. I can't trust either one because I'm just like, what's going on?
Yeah, cause ain't no way.
Yeah, your cousin fine, man.
He said,
Yeah,
"Yeah, your girl's a fine man."
yeah.
She's standing about 5'10", 5'11", something like that.
Damn, she tall as me.
Yeah, y'all about yeah, cause she's taller than me. She got at least be 5'9", 5'10". She's not my height. She's taller than I am.
Yeah. Hell, she be on the move like you, Mo. She be everywhere.
She's single. She ain't got nobody.
I see her at spots that I
Mm-hmm.
either been to or passed by for sure.
Mm-hmm. She got nothing else going on with her life. She
Yeah,
traveled, and then she slowed down. She traveled her ass up. She doing her now. She unlike me. See, I came back and reached back because they was like, "Oh, Mo just left. She's doing her thing. She didn't think about nobody." I came back and I reached back. Not Stacy. Stacy was like, "Whatever. Y'all better get in where you fit in."
she got a sister, Brandon.
Oh yeah, she do got a sister, Shemaine. She's
What?
yeah,
Yeah,
she's pretty. Shameen's pretty.
yeah, she pretty too.
But But Charmaine is she locked down to somebody. She got four boys.
She got
She
what?
got 4 boys. She
Long
grandbaby.
denied.
She a grandbaby
Shit
now.
long.
But if you see her or whatnot, you wouldn't know. You couldn't tell. She had
No,
four
yeah, you
boys.
can't tell.
Her
She,
boys is grown. Her boys
how,
is
how old is she?
Charmaine. So Stacy is the Charmaine 40, just made 40, 41.
Well, she had her kids young then.
Yeah, she had them at 15, but I promise you, she had them babies, but she worked her ass off to take
Yeah, I
care of
mean,
them
she's
boys.
still in shape. Yeah, she still got a
Yes, yeah,
body
she don't play
type.
no games. She don't play no games, honey. She had her son, then she had another one, and she does hair. She's a phlebotomist. She work in the emergency room. Yep, she's been working. She's been doing her thing since age 15.
These your people on your mama's side or your dad's side?
Yeah, my mom.
Okay. I can see some of them. I can see they kind of favor your mom too.
Yeah, because their mom and my mom are sisters.
Right. Yeah.
I told my mom, I said, hey, I'm not adopted because everybody look y'all look alike except for me.
Oh man, your cousin looked like a girl I used to mess with
Which one?
in New Orleans.
Sister?
Stacy. In certain pictures, she looked like this girl named Brittany. I swear to God.
Oh Lord.
Her people from New Orleans. That's the last time I seen her too. Dang, man.
Now
This might
Stacy dad people are from New Orleans.
oh for real?
Yeah. So it may be one of her cousins.
I don't know. The old girl was a Johnson.
I don't
Johnson. Yeah.
I'm trying to see what picture Shemaine you see. Let's
Hold
see.
on. 2024 will bring Stacy happy memories, more money, and new opportunities. Okay, Stacy. Okay, baby.
Okay, Stacy. You fired. Where you see Charmaine at? I'm trying to see.
It was a picture that I think she created the picture and put all
Oh,
three.
with no, with my aunt and her brother.
Huh? Your aunt and her brother.
Oh yeah, there's a picture with her, my aunt, and her brother.
No, just say my siblings, Damon Edwards and Charmaine
Yeah,
Edwards.
yeah. What year? What's the date?
That's 2023, July 26th.
Oh, pass this up already. July. Yeah. Yep. That would be her. Yep. She may got 4 boys. 4 grown boys. She a grandma now.
That's crazy.
Yeah. Boys got boys. The boys got boys. Each one of them boys got boys, except for the last one. He like 9 years old.
Hmm. Oh, I see a picture of her dad.
Oh yeah,
Her and her dad
oh,
in the
man.
picture.
Mm-hmm.
Oh, his birthday a day after mine. Dude, this might be fate.
It's September.
September, here's
Your
September
birthday,
3rd.
yours on the 2nd.
Yeah,
Oh, my mom was on the 4th.
yeah, yeah. Your mama right around the corner. My mama's right around the corner from hers. It was on the
Mm.
5th.
Oh, she couldn't wait. She couldn't wait.
No, she couldn't. She had to
Ramsey
went.
be in
Oh,
the chat. Ramsey be in the chat cutting up.
Ramsey, that dude is funny, man.
He's talking about, I've seen child support crippled men. They in your business like a move.
He said, what?
He's talking about they in your business. He said, I've seen child support crippled men. Listen, child support is weird. I don't think people should be on child support after the age of 18 or if their child is in college. Cause I seen some people that's on child support, they like in their 60s. I'm like, damn, when you gonna finish paying child support? You ain't never gonna be able to live. You already ain't making no money.
Mm, right. Shoot, boy, that.
Where Brandon went?
No, I'm here.
Yeah, that child support take you down, boy.
Mm, mm, mm.
That ain't
What
fair.
y'all doing for Father's Day? Wait a minute, y'all got babies? You ain't got no babies. Brandon, you got some babies?
Nah, I ain't got no kids.
Most stay disrespecting, bro.
Just always.
What did I do? What did I do?
Talking about you y'all got some babies. Man, you know we ain't got no kids, man.
How is that disrespectful? I'm gonna forget. I'll be forgetting. I don't know. Maybe y'all would. What y'all waiting on?
Man, why you want us just to go out here? Okay, I'm
I didn't
waiting on your
say that.
cousin. Since you asking me what I'm waiting on your cousin. How about that?
How's it going, Chris? Wait on your cousins.
Go ahead. Go
Mo
ahead.
want us to go out here and just
Have some baby.
push a baby
Y'all
through
taking
any
too
one of these
long.
chicks, man.
Y'all taking too long.
Where your kids at?
Well, it's too late for me. Won't
No,
be
it
none of
ain't too
that.
late. You got
Y'all
women out here
young.
giving birth. No,
Man,
no, it
I
ain't
am
too late.
not giving. I'm good.
Put you on CMOS diet, you be good.
Shit.
Yeah, eat that sea moss smoothie and you gonna be good. Popping babies out 3, 4 at a time.
No, thank you.
Wow.
Look at Mo. Talking about what
But
we waiting on, what you waiting on.
I don't know what y'all waiting on. I don't know. Y'all better get y'all a boo.
I'm waiting on Stacy right now.
Mm.
Soon as she accept this request. What's good, nigga?
It,
Really
it was good.
Oh my god. Mm.
good.
Brandon, what you waiting on?
You know what? I'm crazy, but the right one.
I
Yeah,
guess. Yeah.
waiting on to go back to Italy.
You know what? You talk about it, but I'm actually thinking about it right now because my cousin's getting he's coming back to the States.
Yeah.
Go and get your boo from Italy. Hey, Brandon, this lady told me what she's doing my contract stuff. She said they got houses in Italy for like $1 or €1.
Really?
Yeah, she.
No, no. Okay, I'm gonna tell you because I know what you're talking about.
Oh, what is
So
it?
yeah, it is $1, but you gotta still rehab and renovate that thing, and that's gonna cost you 40, 50 or more thousand.
And like I think the housing over there, like to build a house is real expensive. It's not like, drywall. They actually pour concrete walls.
Yeah. I put a
Okay.
video about that, about a lady doing it. Yes, it was $1, but she had to renovate it. She had to spend some real bread on it, and she could afford it. Of course, it wasn't bad, but it is true story to that.
Yeah,
Mm.
like these houses look like they really look like they're old, like all the way back, but like on the inside they're all decked out. Like they got like these big ass beams that hold the house together. There's like no nails. It's almost like it's a puzzle piece in a
Mm,
sense with like the wood, like meshes together into another piece of wood.
right.
It was a whole house of like everything is like marble flooring, concrete. That's it.
Yeah, I
It's
finna.
no drywall. It's no what's that called?
Yeah, that's none of that.
No, it's you gonna get a house. You are gonna get a house. You are gonna do it right.
Right. I'm I'm gonna tag you in that post, Mo.
Which post? You gonna tag me?
Yeah,
Oh Lord.
in that
Don't.
video.
Don't
where
tag.
that lady bought that house in Italy.
Mm-hmm. Oh, you said with all that?
No, she hooked that mug up. She hooked her house up. That mug was dope too. She really hooked her joint up. So she spent the money to rehab it.
Got you. Yeah, that's what they plan to do. But I think she has a Hispanic background or something. So maybe she's from there. So it's like, why are you moving? And then she said, I got to go. I said, I ain't mad at you.
Who said that?
The lady who was moving.
Oh, she
She
wants to
moving
move
in
to Italy.
September. Yeah, she want to buy. She said her husband going to get a place. She's like, I'm going to retire and live in Italy. I said, it's expensive. I said, it's only going to be cheap for a little while longer. She was like,
I
no,
mean, but
we
you get
don't
free
need.
healthcare though.
Shit, everybody get free healthcare but us.
Yeah, right. But like, I mean, like, I'm quite sure you've been abroad, right? I mean, obviously
Mm-hmm.
you've been stationed, but you know where the vibes is
Germany.
going. Yeah, like it's totally different. The dynamic,
Mm,
like
it
you
is.
feel you feel less pressure for some
Yep.
reason from over there than over here.
Yep. That's pressure
Like,
to buy name brand clothes, shoes, you
right.
name.
Everybody damn near friendly over there, even though they probably hate your guts because you're black, but they're still semi friendly.
Yeah.
Like walking through Italy and Venice. I mean, I'm people hello left and right.
Mm-hmm.
Buongiorno, all this other shit.
Damn, went to another language on you.
Hey, you
Yeah,
got to.
yeah,
You can learn it.
man. Shoot, I mean, why not? If you can afford it and you still getting, you can still make money. Shit, why not? Get the fuck out of here, man. And go try some other shit out. See if you like it.
All right, y'all.
Yeah, I tagged you.
You tag me? Okay. Let me check it.
All right.
What'd you send me?
Huh?
I see it.
Yeah. The hell Sonny sent. Yeah. And Sambuca di Sicilia. Brandon
Oh,
might
it's
know.
yeah, that's what she said. Abandoned homes. And you
Yeah.
gotta fix it up.
Mm-hmm.
But she said, I can't have my job there, so I'm just gonna retire.
Yeah. And it didn't look like a bad place to retire, to be honest.
I wouldn't be able to retire there unless I could take them checks with me.
You couldn't take your military checks.
No, you can only stay out of country so long.
I mean, you can't live somewhere 6 months and then
Yeah,
come
that's what
back
I'm
to
saying.
the States. Yeah.
Yes, that's what I'm saying. You possibly can. You possibly can, but it's so finicky. It's easy getting out, going into somebody else's country, but it was hard bringing your ass back to America, talk about your business. You know,
Yeah.
they like their money.
Mm-hmm. Oh, matter of fact, that dude, he called himself the Jamaican dude. He was in the army or something like that. And shoot, he be traveling everywhere, staying in different countries. I
Hmm.
think he in South America now, but he started in Asia.
Oh,
And
you talking about that guy who he had the channel to search for Aruba?
no, not Dynas.
Oh, or somebody else?
Yeah, it's another brother on Instagram. He from America, but he got Jamaican ancestry. He um he he been traveling to Asia. And then he went to South America, a couple of places, Colombia, and somewhere else. I think he's still in South America right now. But shoot, he ain't been back to the States like that. He may come back and visit, but he getting that military money.
Wow.
Maybe that's a prerequisite that you at least gotta come back to the U.S. at a certain time.
Yes. Yeah, so many days or so many days. Okay.
Mm.
All right, y'all. My time is winding down.
All right, y'all.
Alrighty.